All right. Hello, everybody, to another Palantir earnings stream. It is Monday, November 3rd. We've got Palantir Q3 2025 earnings on deck. And I am very excited to be here. I think you guys can hear the sirens in the background. Okay, there you go. They're relaxed. Dude, these sirens in New Jersey have been kind of crazy over the past couple weeks. We're here. We're live. Thank you, everybody, for being here. This is going to be an exciting show. We've got Palantir Q3 earnings coming up. We have been covering this company for the better part of 4 years now. When I mean we, I mean myself, Matt, Amir, Arnie, Sachin, just so many people that have been part of this community. And so we have another opportunity to do that. Very blessed to be in this position where we get to cover this and everyone gets to hopefully enjoy some of the analysis. One thing I want to start off with, and I say this pretty much every time before Palantir earnings, is regardless of what happens to the stock, the company and the performance of the company is something that most of us really care about. And I know a lot of people here care about the stock, but I think there's a lot more people that have been in the stock since, realistically under $10. And as a result, the company performance is what really matters. Palantir is now up more than 20 times from the lows. And so the stock price obviously has done very well for shareholders, has rewarded people, changed their lives. It's definitely changed my life. I'm sure it's changed so many of your lives. The community is the greatest thing I've gotten from Palantir, and I think most people would agree as well. Outside of the financial gains, the ability to celebrate the journey of covering the world's most hated company 4 years ago, which now seems to be the world's hottest AI company, has been an absolute blessing. So regardless of what happens to the stock price, obviously we will be analyzing the numbers and analyzing the stock, but very grateful to be here and very grateful to celebrate it with the entire community. Joining me today, we got two people who have been in this name since the $6-7 range and have been doing a fantastic job covering it along with the entire community. Ladies and gentlemen, we got Amir and we have Mr. Matt Money. What's up, guys?
What up?
Thanks for having us, brother.
As always.
Are you guys excited? It's another Palantir earnings as we end out 2025.
Dude, I hope Carp bangs on the table again.
I think everyone kind of already feels that they're going to blow the numbers out of the water. I would be kind of surprised if they didn't. I mean, everyone has kind of high expectations, but they kind of keep surpassing that. But I'm really curious now because the stock has been soaring. I'm kind of curious, is this can we push it even further? Because, we've been talking about it, the momentum has been crazy, with the Palantir for over a year straight now. Everyone kind of knows that the numbers will be great, but will we be able to push 210? I don't know. I mean, do you remember last earnings? We all kind of had predictions will it be able to surpass this kind of number? And then you just blew past. So I don't know. Is there still steam in this momentum? That's kind of what I'm curious about because I already think that the numbers are going to be great. I already expect that.
I think that is the biggest question. So Palantir was at 170 less than 3 weeks ago. I think literally 2 weeks ago, and now it's at 206. So obviously we have had a massive run since the decline over the past couple of weeks. And I think the number one question on everyone's mind is, hey, we know the numbers are going to be good, but how good do they have to be? The implied move is 8%. So that's $17, but that was before we moved up to 207 today, which was another all-time high. So it's looking like either 220 or 180, but we're going to have to see how the numbers plan out for that move to take place. Matt, how are you thinking about the stock price action in particular? And how do you think the numbers will turn out in terms of having an impact on the stock?
I mean, the movement in the stock has been unbelievable. And yes, I am reporting live from a submarine in an undisclosed location. So people that are roasting me in the chat, please continue. It's making my day. But yeah, I think the earnings are going to continue to show up well and really excited to see. I mean, but I think you're right. I think a lot of people are expecting a lot. So I'm kind of curious, selfishly, I hope the stock goes down. I would love to buy more, but I know in the meantime, that also means people, unfortunately, in the short term lose money. So it's a tough spot to be in. I'm continuing to buy every time I get a paycheck. So, but just the performance of the stock has been phenomenal. And I think all I can equate it to is that people are really starting to see the true potential of this, and they don't view it as a black box anymore. So like you stated as your intro, once the most hated company, people are now starting to realize is potentially one of the most important companies in the world.
We got someone else who is joining us that this guy has actually been doing what all of us as Palantir investors should have been doing, which is traveling the world with your gains. But happily, he's joining us for another Palantir earnings. Arnaldo, what's up?
Hello. Long time no
Oh my
see.
God, blessing us with his presence. It's been a while.
Did you
Arnaldo.
even hear the way he said hello?
Arnaldo.
Arnaldo.
Yeah, it's so much lack of stress, just living the dream.
Arnie, it's been a minute. Obviously, the stock's at all-time highs. I'll give the floor to you. What are you expecting on this earnings?
At the cost of sounding boring, I feel I'm always saying the same stuff in these last quarters, that all the focus is always on the revenue, which we had the pleasure of seeing this famous acceleration happening. But in reality, the biggest story is on the margin side, in my opinion, because now all the narrative is on how AI is boosting growth. Yes, that's cool. But what about the productivity? And everybody now wants AI in some sorts. But the only company that is showing a revenue boost that is significant, at the same time showing that they're able to do more with less, is actually Palantir. And the deals that you're showing right now, I think they speak for themselves. We're talking about deals that are more than massive from whatever vertical, while other companies just crave what Palantir is doing, talking mainly about ServiceNow and Salesforce. I don't know if you noticed their like the results of these other two guys were quite bad, in the sense that they are speaking a lot of, oh, we are AI first, we are here and there. But then when you actually look at the numbers, this is what you get. Like a growth that is just there, 10% growth. And then you go on ServiceNow, which is doing better. But again, what is that amazing growth that the management tells in the earnings call? We are AI first company. What is that?
I think it's a fair point. I think the kind of core argument that you've been making, that a lot of us have been making, is that Palantir is the only software company that is growing. In a world in which every company is saying AI is the tailwind, you would think, okay, dramatic growth, right? The fourth industrial revolution, Palantir is actually growing. And they guided for 50%. The street's expecting 1.09 billion. We know they're likely to beat that. And if they beat that by a wide margin, then they are the only software company on the planet growing with the margins that they're growing at. And that's why I think the story continues to be exciting.
What do you guys think will be the single most important metric? For me, I kind of have two, but if I had to choose one, it would be net dollar retention, just for the scalability story that we've been hearing about. That we've been having for like years now. Like the whole core idea is you get customers, which is my second most like kind of important one now. So I don't care too much about top line, as Arnie was mentioning. I think it's more about margins now, but. Number one, the net dollar retention. If we can reach 130 or above, it really cements the whole, you get a Palantir product and then you just keep expanding Palantir across your whole business. You keep powering your whole business with Palantir. And as you do that, you have better metrics as a company, and Palantir benefits. It's like a win-win situation. And the scalability is kind of endless, considering that they're in every single industry that exists out there pretty much. So I'm curious your thoughts, what you think is like the number one most important metric that you're tracking.
Arnie, your thoughts, customer count, operating margins, what are you thinking?
I think it's the combination of everything. We know that the customer count was very important a couple of years ago, because we were just craving to see some signs of emotion. Okay. Now, yes, it's obviously very important to get a lot of customers, but we know that these customers can be of very different size. I don't want Palantir to have 10,000 customers like Snowflake just for the sake of having customers. I'm happy when the customer count increases, but at the same time, I'm happy that these are customers that matter and want to sign deals worth even 200 million in the case of Lumen. We were talking about Boeing, the defense. So it's like Palantir is capturing all the leaders. And if all the leaders are happy to partner with Palantir, that to me at this point matters more than the customer count per se. Obviously, if you have the leaders and the number of leaders increases and they expand, then obviously the net dollar retention expands, and that creates all the powerful flywheel effects that make us happy.
Matt, any core metrics you're looking at for this quarter?
For this quarter, yeah, revenue, obviously. I would love to see that with the 52% year-over-year growth. Also customer count. I think Amir was hoping for 100. I would be ecstatic with 100. But we'll see. But I definitely think that that's something that's obviously important. Net dollar retention maintaining its upward trajectory as well. I would love it to see get to over 130%, which we haven't seen in since 2022 or even earlier than that. There's a lot of different things, but and I'd love to see U.S. commercial continue its pace over 100% year-over-year growth. That was huge to see last quarter, and I'd love to see that again this quarter.
Yeah, I agree. I think U.S. government growth is going to be really important, along with the fact that obviously net dollar retention and the quality of contracts that they're getting really matter. One point I heard today by one of the analysts was that some of the government agencies were anticipating the shutdown, and so they kind of depleted a lot of their budgets towards the end of September in order to make sure that they have services coming in, even if they can't officially pay for those services. So that could have led to a little bit of a boost in government revenue, particularly from the U.S. towards the end of September, ending out Q3, which is also, you know, potential tailwind. But on the flip side of that, this government shutdown is still a thing. Palantir has a multi-billion-dollar business in the government. Amir, any thoughts on if the shutdown is something that we should be at least curious about as investors for Palantir?
You know, I never even considered that. I hadn't heard that. It wouldn't surprise me if it was to be the case that people are like, oh crap, let's deplete everything. But I mean, what is the current status on the shutdown? Because it seems that like Democrats are under a lot of pressure lately. Like it is a very, very bad look, like optically. So I don't know much longer it's expected to continue. It seems like they're actually losing a lot in like key areas by like prolonging this. So I'm not quite sure. I don't really have any real comment as of how much it might have impacted Palantir. Like both, it could have been positive. They're like, oh shit, sign Palantir contracts right now. But no, I don't think it's meaningful. Like actually, I don't think it has some like large meaningful impact. I mean, these processes are kind of long, drawn out. They're kind of strict with having to meet so many requirements and stuff like that. So I don't know. In reality, I don't think there's much impact, but I haven't been tracking the stories. I don't really know.
Yeah, that's fair. I don't think there's going to be a massive impact, but at the end of the day, if the government does stay shut down for like another couple months, then, you know, then we get into Q4, and obviously Palantir still needs to get paid. You would imagine those contracts are already pre-approved from a long time ago, so hopefully it's not going to have the biggest issue. Sorry,
guys, talking about the government, I think it is worth realizing something that maybe we haven't really took perspective on. Do you know what happened in Q2 that now should start affecting these numbers on? What was the most important government stuff that happened? Let me share this.
NATO,
first, I think. Then I can share the screen.
Maven?
Mm-hmm.
Yeah, it was Maven, right?
So we in Q2, we got signed $800 million for Maven for 4 years. So already that moves the needle. And then we got the NATO deal still for Maven. Then we also got some interesting clients like XAI with TWG, which is a huge holding. So all these contracts that happen in Q2 now should start affecting. So I'm very curious of the government side, because when we started covering the company, the narrative was more or less, the company was saying these government revenues are super safe. The market felt government revenues suck. We want commercial.
Right.
But what if actually the government side keeps printing money at 50% growth, and we know this 50% growth also comes with huge margins.
Yeah. No, that is a fair point. Or Amir, go ahead.
Yeah, I'm kind of curious because, as you mentioned, like in total contract value, government was 1.2 billion last quarter, and in total they signed 2.3 billion in total contract value, and that was 143% growth year over year. That is like insane for Q2. But I think like Q3 has been even more crazy with like everything that they've been signing. Like, how do they report like well up to 10 billion? Like, how does that show up for the quarter when they say like total contract value? So I'm kind of curious if we like blow past like even 143% year over year growth is crazy, but I kind of feel like this quarter is going to be even crazier compared to the last one. Like, I think 2.3 billion is probably going to get beaten this quarter as well. I mean, the activity has been insane, but the only difficult thing is that Palantir really doesn't have a need to report as often on their investor relations page as they used to when they were considered a black box, as we were talking about. They would like constantly put out, we signed a deal with these people, we signed a deal with these people, and like they had to keep it going. And that's why Kramer said like, they're only they're an investor relation company. They're not a real company. Like, if you guys remember his quote back in the day, Palantir is largely recognized now. They don't need to report as much, but still, even looking at what we do know, the post that Arnie famously shares on Palantir Bullets, before earnings, it's been some massive deals in Q3. So I'm really curious what it's going to look like.
No, I think that's a really good point. I mean, one of the things that we now know is that everybody and their grandmother who isn't even a part of the company wants to say Palantir on the earnings call, just because it gives them clout and it gives other people, the at least maybe investors call that they're doing something about maybe their stale innovation within the company or their lack of digitalization efforts or what have you. But that's something that we've seen, is that people are almost begging to put out press releases, not even on behalf of, or not even Palantir putting them out, but companies putting it out that, hey, we're working with Palantir, just to get people to say, oh, wow, they might be doing something with AI. They might actually be doing something, rather than just sitting on the old business model that they've been sitting on for, say, 10, 20, 30 years that hasn't been doing anything, and they've been losing market share. So I think we've done a complete 180.
Think of the NVIDIA partnership that was released on NVIDIA website and not yet on the Palantir one.
Arnie, I was going to ask, you weren't on the
crazy.
week. We didn't get your thoughts, but what did you think when you saw that partnership, Arnie?
I was like, chips and ontology is real. I really wonder if that was a hint nobody really grasped.
This and what he's talking about is this right here. Karp said this back in June of 24. It's about chips and ontology.
You in the market is going to go to chips and what we call ontology. We have this ontology, and the ontology will allow you to take a large language model and use it, refine it, and then impose it on your enterprise in the logic of your enterprise, in the security model of your enterprise. And what does that mean for the 70 people are here presenting, talking about why they're using it, how they're using it. You got to remember, we started selling this product just over a year ago. We started with the claim that we knew a lot about the precursors of large language models, and the general approach of just buying models is going to be essentially self-pleasuring for an enterprise at the cost of the enterprise. All the value in the market is going to go to chips and what we call ontology.
I mean, he was right. A lot of that value has gone to chips, and it's gone to the software companies that can actually incorporate the reason that these chips are being bought, aka the LLMs. If there's no incorporation of the LLMs in the context of an enterprise, what's the point of even training all these models? Seems like that's what Palantir is doing.
He's always kind of right. If you really go back and watch like historical interviews with Karp, at the time, some of might have been like sounding like really, really crazy. Even the one that we kind of lost hope for, reaching 4.5 billion by 2025 year end. Like it's looking like it's not impossible, even though we kind of give up on it. And like all of these things, like, yeah, why should I care about what Wall Street says today when I know what they're gonna say in 2 years? Like all of these golden quotes, like typically when Karp says something, you probably should be listening, because he's been right on like most of the things relating to this space. And yeah, chips and ontology, baby.
Doesn't make you think that despite we know that we need to pay a lot of attention on every effing word the Karp says, but it's never enough the level of obsession we can have.
Yeah, there really is never enough. I mean, it has just been an incredible journey. I want to reiterate again, whatever happens to the stock is whatever happens to it. It's made a pretty large move in the past couple of days now. The implied move is either 180 or 220. 180 or 220. So, I mean, it would not surprise me if the stock stays flat, if the results are really good, but not good enough for 220, but also not good enough or not bad enough to make it dump. And we end up not having the massive implied move. But given the amount of volume that's been coming in over the past couple of days, there probably is going to be some move. And, the numbers will speak for themselves. But I think even if we're able to hold like 205, 200, I think a lot of us will be pretty grateful. Stock's up another 170% for the year. It was up 300% last year. So it has rewarded shareholders very nicely.
Look, the stock is obviously expensive according to financial metrics. When we are starting talking about 100x, but not on the earnings, but on the sales, we're talking about a company that is very expensive. We see that also in terms of EBITDA, free cash flow, call it however you want, of more than 200. So the question that I personally have, I think everybody should have, is what is the upside in holding the company? I think we need to be honest into trying to understand what is the state of what it is right now and what the market still doesn't see if we want to stay invested in the company. So assuming that you are still investing in the company, what do you see that the market still doesn't see?
Who's going first?
Amir, you got it.
I've been saying this like for the longest time, because if you've been following weeklies, if you've been following commentary like from us and me specifically, Palantir has been trading overvalued for quite some time. But then we had a situation like from Q1 to Q2 where intrinsic value like doubled in 1 quarter because we found out something that we didn't know about the company. I still think that Palantir is just so early. We don't have visibility into like the sheer scalability, but like we have some hints. We are seeing like this unprecedented like acceleration across the business, and we believe they're still early. Like they don't even have 1,000 customers yet, and they're still like able to scale current customers like crazy, and we expect that to reach like 30%, like just from current customers, not even accounting new ones. I think the reason to hold it, why I feel confident just keeping shares and not selling, is because we simply don't have some visibility enough into Palantir. Everyone can recognize that it's a super high quality company. We can recognize that it's likely one of the most important companies in the world right now. They're well positioned for like the biggest, most hyped sector in the like financial markets that we have ever seen, probably like AI. They're like right at the center. And yeah, it might be expensive, it might be overvalued, but just quarter to quarter, like they're just improving intrinsic value just so massively that I believe that it's worth just holding it. And as Matt mentioned earlier, like I kind of hope that it does drop, because I kind of want to buy more at like closer to fair intrinsic value. But like I don't have a fear. Like I don't think that one of the most and highest quality companies in the world is gonna collapse tomorrow. Like so yeah, that's the reason for me. Like the sheer intrinsic value growth every quarter that passes.
But do you think is that the analyst, the market in general, still is not able to appreciate?
I think the market doesn't really care about Palantir at all. I think the market in general just cares about the momentum and the lack of anything negative happening to the company. That's why I think it's been running so much. I don't think the market itself is like, oh, okay, we can see that JC2 is gonna like no, I don't think the market really cares. I just think that it's like one of those momentum names, a lot of volume. Volume breeds more volume as people want to keep piling in. So I think like the market itself is probably mainly momentum, but I still think that the people who are starting to understand Palantir more and more are increasing. So it's like a double whammy kind of thing. That's the way I see it.
Mm-hmm.
Let me just say real quick, guys. This is going to be Palantir earnings. We're not covering any other companies. So Grab's going to be in the afternoon, not covering Grab.
What?
Yeah, the title is Palantir Q3 2025 earnings. So I think
What? I came for Grab. I'm leaving.
No, so like for those spamming other tickers in the chat, I'm sorry. Today is not the day for that. Tomorrow morning on the market open, we'll go through all those earnings. But today, we're just going to be here for Palantir. So that's what we've got. Yeah, there you go. We're all wearing our Palantir gear. So shout out to Iliano and this merch store that has been incredible.
The homie.
And we are all wearing our gear. All right, so we got 3 minutes left. We're going to get the results in a second. Again, the street wants 1.09 billion. They want 17 cents of EPS. So in the next few minutes, like around 4:01, 4:02, we should get the numbers. I will be reading the shareholder letter as soon as it's out. That shareholder letter tends to be long, so please bear with me while I read through the letter. I do think the CEO, who has changed all of our lives, his words deserve to be read, even if people don't want to listen to the letter. So I will be reading that letter in its entirety as soon as it's out. And what we're looking for is a beat on revenue, a beat on EPS, an increase in fiscal year 25 guide, operating margins to continue to go higher. And if we can get that, then I think this will be an exciting earnings.
Guys, since everybody is now again professional gambler on Kalshi, it seems, let's simulate without money. Like, what would be your personal bet on what will happen at the stock post earnings?
Are you saying pump or dump? Is that what you're asking, Arnie? All right, put it in the chat. What do you guys think? Pump. I'm going with pump. I think they're gonna have a big beat. If they don't pump because the stock's up so much, it is what it is. But I think there's still a world where they can pump because they can beat by a pretty high margin. Amir?
Yeah, I'm also aligned with pump. I think the quarter is going to be great. I have a hard time believing that they're not going to beat. And I think, yeah, pump for me.
Come on, at least one dump.
I'm putting the poll in the chat, by the way. Go ahead, Matt.
Do you want to say first, or do you want me to say first?
No, I said pump already.
Okay, then I'll take dump just because. No, I was going to say I'm always wrong for the past several quarters. So I've been thinking that we were going to hit a turnaround, not because I wanted to. Actually, selfishly, I do want it to. But yeah, I mean, I think at some point the overvaluation will get it. I just don't think it's going to be this quarter. But I'll take dump just to be the the customer service setup. Yeah, yeah, I'll take it. I just need Chris Patel's fake Indian accent, and it'll be perfect.
Oh my god!
But it's just the best. But yeah, I'll take dump. But I don't know, man. I'm cautiously optimistic that these guys will continue to do well. But that being stated, I think that there's a lot of haters out there still that just want to see the company fail for God knows what reason, whether it's political or whether they didn't buy it at $7. I don't know. What I will say is they'll get their time where we do see a 20 or 30% pullback just because of macroeconomics or because of some reasoning that for some unknown reason, we just happen to have a 20, 30%. Let them have their heyday because in 10 years time, this won't matter. They'll be wishing that they bought at 200. So, that's why I buy. I can't time whether it's going to go back to 180 or whatnot. But what I can say is $200 is cheap compared to where we'll be in 10 years. So for me, I'd rather continue at least to get as much of the company as I can and hold on.
All right, ladies and gentlemen, the stock market is now closed.
You know what's crazy that we haven't done? Like I just got reminded of it with the Kalshi thing. We should have had a Carp earnings call bingo, like the things that he would say. Did you guys see the Kalshi and the Coinbase CEO where he just repeated everything that was on like prediction markets. I kind of feel like we should have had a carp bingo for quite some time now. I mean, how many of these have we done? We don't even have a carp bingo yet. Kind of want a carp bingo for next earnings. I'll make sure to create one for that. So
I like
look
that.
forward to Q4, everyone.
All right, now we wait for the results. They are not out yet. We should be getting them in about a minute. And then as soon as we get them, we will start diving deep into the numbers. 207.98. We are green after hours. 208, 208.30. It's moving higher. 208.55. We are green. 208.50. Still no numbers yet.
Yeah, I don't know if that's anticipation of Bloomberg
It's
terminals
likely.
printing something.
It's likely anticipation.
Have you got the terminal yet, Amit? It's been a while now.
I do not have a terminal, but I did hire someone to help me with research and news, and they basically function as my terminal. Shout out to Cactus Jack. And so we should get the news pretty soon. And see what we get. 208.30. Again, Street wants 1.09 billion in revenue and 17 cents EPS. Don't have it yet, but once we get it, I will let everyone know what we've got. Don't have it yet on the website as well. Nothing. Is this is from, okay, so they still haven't updated it here. 208.21. It's holding 208. Again, implied move is about 17 bucks up or down, so 220 or 180. Don't have the numbers yet. Nope, still don't have it. All right. We're waiting. We are
Apparently it's
waiting.
the best moment.
Yeah, this is literally the best moment. Like, all of your family and friends don't know that this is happening, but for the people that are here, like, we all know that this is happening right now.
And then you see this like, boom.
Yeah, it's literally, you're happy if it goes up, sad if it goes down. It's literally one or the other.
Do you think these guys trading here are more Robinhood traders or like Citadel institutional people?
I think it's both. I think on a name like Palantir, it's both.
Like,
But look at the
you
bottom
ever
of these
trade-
candles. It is so perfectly like.
Yeah, usually on a big earnings like this, you have everyone that's speculating back and forth. Still don't have the numbers. Still don't have it. Still don't have it. We are green after hours. I think we closed at like 207 and we're at 208. But the numbers are not in.
Shareholders
yet.
out. Shareholder letter. Oh, that's
It's
Q2.
out.
Never mind.
That's Q2, right? Yeah, that's what I thought.
They tricked me.
It
Oh,
might
is
be-
this anticipation crazy?
Nope, don't have it yet. Vertex beat on the top and the bottom, and then Navitas came in line with EPS and they beat on revenue. Vertex Pharmaceuticals beat top and bottom. Navitas beat revenue in line on EPS. Still don't have it yet. Not on the website. No, nothing. Nothing yet. Probably at around 4:05. We have 1 minute. CBC doesn't have
What?
it. Doesn't have it either.
Oh,
Well,
Oh, we're up. Oh, we're green. We're green. Oh my goodness, we're green. That's a
The
big green
fuck?
one. 220, 221.
green.
It's green. It's greeny green. It is green. I don't have the numbers yet, but it's green. Is it holding the green? I don't know, but the initial reaction seems like it's a good number. Don't have it yet. I don't have it yet, but it's green. 216.68. Okay, we got it. They beat EPS by 24%. They beat revenue by 8%, 1.18 billion. 1.18 billion. That is an 8% beat on revenue, 24% beat on EPS. EPS is up 110% year over year. Revenue is up 63. Is that correct? I believe that's 63% year over. Yeah, that's 63%, folks. Street expected 50%. We came in at 63%. That
Well, give me
is not
the
So they
8K.
made 100 million revenue more.
yes, that's what it looks like. Let me pull. I think they just
That's a
tweeted
lot.
results. That's
I had them doing 1.12 billion. What did they?
1.18. They came in at 1.18.
Man, even beat my expectations.
That's 63%, right?
Amazing.
That's insane.
Yes.
That's 63%. Holy.
Whoa.
That's absolutely insane.
If that is true, it means also the guidance for the year will increase by a lot.
Yeah, okay, so I got some numbers. So they see fourth quarter revenue to 1.3 billion. The analysts thought it would be 1.19. They see fiscal year revenue to 4.4 to 4.4. The analysts thought it would be 4.15, very close to that 4.5 number Carp said a couple years ago. Fiscal year adjusted operating profit to 2.15 to 2.6. The street thought it would be 1.93. And then adjusted EBITDA for the third quarter was 606 million. The street thought it would be 502, which goes to show their margins are continuing to go higher.
Yeah, probably eclipsed that rule of 100 like quite handily this quarter. Like a rule of 110 or something is going to
114.
Yeah, let's get some coverage on this. Here we go.
Okay, the
This
press
is-
release. I shared it in the
Oh,
chat.
thank you.
Let me pull this up right here.
Doesn't even load for me. It's too much traffic.
These numbers, folks, these are just mind blowing.
Revenue now forecast at 1.33 billion. This is above street estimates too. Full year revenue 4.4 billion, also stronger. 2025 free cash flow guidance also revised higher. For Q3, beats in both U.S. commercial and U.S. government. U.S. commercial revenue up 121%. U.S. government revenue was up 52%. Rule of 40, this is a enterprise software metric that gets used. 114% now for Palantir. I spoke with CEO and co-founder Alex Karp, who told me he suspects these are the single best numbers ever printed in enterprise software. Quote, I think it was a watershed. It is a watershed moment where people who are just basking in their own narcissistic skepticism of Palantir, largely for reasons of laziness or ideology, have to really rethink maybe the ontology is the formative piece of software, maybe the FTE model, maybe being pro-American is actually a good thing. Karp again saying that those who will make money in AI will have chips or the ability to connect that raw data to the real world, meaning ontology. He says Palantir remains focused on the U.S. It's now about 3/4 of revenue, saying, quote, we supply our product all over the world, but we're not in the business of doing remedial extra education for the rest of the world. We're in the business of helping the U.S., especially the average person, to participate in the wealth creation. Spent a lot of time in my discussion with him, discussing the impact of AI on the economy and especially the workforce, what Karp refers to as worker available GDP, meaning does the average worker participate in these structural changes tied to AI, and how? And John, in terms of that, talking about this idea that folks that went to elite colleges and got these elite degrees were always seen as very valuable because they didn't have skills and they could go anywhere and do anything, and that now that is reversing and having...
My goodness, folks, these numbers...
Dude,
I mean,
40% net income, 33% operating margins. That is insane. What the fuck?
I mean, 40 cents on every dollar goes to the bottom line. All right, let's read through the press release and then we'll get deeper into the numbers. 114%, our rule of 40 score. These results make undeniable the transformational impact of using AIP to compound AI leverage. Year-over-year growth in our U.S. business surged to 77%. Year-over-year growth in U.S. commercial, 121%. We are yet again announcing the highest sequential quarterly revenue growth in our company's history, representing 61% year-over-year growth. So they got a 6 handle. The street wanted a 5 handle. They put a 6 handle in front of it. 60% year-over-year growth. U.S. revenue up 77%. Closed 204 deals at least a million. This number was 157 last quarter. That's 50 more deals. Record-setting 2.76 billion of TCV. That's up 150%. US commercial TCV, 1.3 billion. That's up 342%. Customer count, 45% year over year, 7% quarter over quarter. Remaining deal value, 3.63 billion. That's up 200% year over year, 30% quarter over quarter. GAAP net income, 393 million, 33% margin. Adjusted income, wow, they broke through 51. This was at 44 last quarter. They increased it by 7 percentage points. 51% adjusted income operating margin, 601 million. Net income margins at 40%. EPS of 21 cents and adjusted free cash flow, 46% margin at 540 million. 6.4 billion in cash. They had 6 billion. They added 400 million to that. They now have one of the strongest balance sheets in all of software as well.
TTM revenue, 3.9 billion. Wow. I am sad. So people are like, Matt's happy and sad. I am sad. I want to buy more goddamn shares.
This is pretty incredible. It did get a pump. I was just gonna say it did get a pump to 220. Now it's down to 209. Again, this is one thing we talked about. The numbers are, I don't even know if phenomenal is the right adjective, but at the end of the day, the stock did move before earnings. So you might have just some people taking some profits, which, you know, ends up happening as well. Go ahead, Amir.
I was gonna say, like, one of the last like remaining bear arguments is like the dilution, right? The dilution is down substantially. It's like 4% now year over year, which is still, you know, quite a lot. But compared to where we came from, like last quarter was like almost 7%. Like they almost like cut that in half. You know, SPC as a percentage of revenue is like down massively. Like, I mean. Yeah, let me plug some numbers. This is crazy. How do they keep doing this? Like we kind of had big expectations, but still, like they just keep surprising us.
Yeah, this is pretty remarkable. Go ahead, Matt.
I was gonna say, how do they keep doing it? It's so funny because it's so true. It's like, how? But I mean, they just keep signing deals. It makes sense.
I can tell you already that this probably increases fair intrinsic value once I like recalibrate everything like massively. So that just goes to say like, yeah, why should you keep holding Palantir even though it's like so expensive over value? Yeah, because like the valuation changes just so drastically because they just, you know, blow it out of the waters every time lately, it seems like.
What's the value of a company that is able to double the net profit already starting from a high base? I mean, now we are talking about 40% GAAP profit margin. So even including the SBC, it's like tier one, absolute tier one company. And still it has room to grow.
I don't see a shareholder letter yet. I don't know if it's coming out. I would imagine it would, but I don't see it yet. When it comes out, I'll read it. But these numbers are just, I mean, dude, there's not a lot of companies, forget software companies, there's not a lot of companies growing 60% at all. And that's what Palantir is doing. The fiscal year guide is so fun as well because I think they're going to beat that 4.4 billion number and they're going to come in at 4.5. And then Karp's just going to be like, I told you guys 3 years ago we were going to do 4.5, you know, and we went through some ups and downs, but we got there. And so if they beat 4.4 and they get anywhere near 4.5, that's going to be well over 50% year over year growth. Again, the letter's out. Okay, I don't see it on the website. If any of you guys have, you can link it in the chat. But I don't see it yet. Palantir right here, 208. Again, the stock, that initial move to 220, obviously because the numbers were amazing. The street's going to have to figure out if these numbers are good enough for them to keep holding. We also have, you know, this is the after hours. Tomorrow is a whole different day. And again, based on what they say on the call, based on the guidance, based on these numbers, I can imagine a lot of people saying they want to get more exposure to Palantir. And that could obviously lead to stock price action as well. Okay, don't see the letter yet. We'll get to it in a second. Let's get a little bit more coverage right here, and then we'll keep going from there.
And some stuff outside the U.S. What do you say?
So, John, I'm not going to be the skunk at the picnic. That role I refuse to take. But I will say, look, I don't know Palantir that well. I'm not going to tell you any insight that people don't already know. However, what I would say is that these exceptional
letters in the Twitter thread. Is it? Oh, there it is. Okay, cool. All right, let's read the letter. Here we go. All All right, here we go. Palantir Q3 2025, November 3rd. We are still at this very start of things. This remains the beginning, the first moment of a first chapter. Our business generated $1.2 billion in revenue for the third quarter of the year, a new record in our more than 20-year history, representing an accelerating and otherworldly growth rate of 63% over the same period the year before. We also generated a staggering $476 million in profit this past quarter, again, a record in our company's history, and to be clear, nearly $500 million in profit in only 3 months. It is worth remembering that the business is now producing more profit in a single quarter than it did in revenue not long ago. This ascent has confounded most financial analysts in the chattering class, whose frames of reference did not quite anticipate a company of this size and scale growing at such a ferocious and unrelenting rate. Some of our detractors have been left in a kind of deranged and self-destructive befuddlement. It has indeed been difficult for outsiders to appraise our business, either its significance in shaping our current geopolitics or its value in the vulgar financial sense. The reality is that Palantir has made it possible for retail investors to achieve rates of returns previously limited to the most successful venture capitalists in Palo Alto. Amen to that. And we have done so through authentic and substantive growth. In the United States, our commercial business has now more than doubled in the past 12 months, growing 121% and generating $397 million in the past quarter. This segment of our operations is an absolute juggernaut, and we believe that it will become on its own one of the most significant business stories of the century in American economic life. For all of its idiosyncrasies and complexities, American corporate culture remains one of the most adaptive on the planet. Our partners in the United States, the earliest and most voracious adopters of the novel language models that are presently reordering human life and the ontology that allows them to effectively operate, understand how significantly the terrain beneath us all has shifted. And they are racing to experiment and evolve, setting aside preconceived notions of what ought to work for what actually does. It is a ruthless pragmatism and one that is yielding extraordinary results. In the end, the route for us to something universal, a generalizable artificial intelligence platform, was made possible by an obsessive focus on the specific, the particularized and quite idiosyncratic challenges and technical problems of our disparate set of customers. Part 2. We have grown quite significantly in recent years, and yet counterintuitively to many, including ourselves at times, our reluctance to abandon constraints has been a principal and driving force of our continued rise. Our headcount is one manifestation of this disciplined approach. The casual expansion of our ranks would have diminished the need to lean even more heavily on the strength of our software and the ontology and to ensure the continued maturation. The alternative would have been to rely on an army of bright minds to do work that would have obscured the platform's weaknesses and ultimately hindered its development. Henry Jaglom, the British film director, said in an interview with the Washington Post in 1994, citing his friend Orson Welles, "The enemy of the art is the absence of limitations." The same is absolutely true in software development. Part 3. A century ago, the poet William Butler Yeats warned, "The falcon cannot hear the falconer. Things fall apart. The center cannot hold." Today, America is the center, and it must hold. A rejection of any shared and defined success of common culture in this nation and others has had significant costs. We should indeed return to a shared national experience, an embrace of common identity that by definition puts forward certain ideas, values, culture, and ways of living at the exclusion of others. It is and was a mistake to casually proclaim the equality of all cultures and cultural values. Some have proven to be wondrous and generative, others destructive and deeply regressive. And an even greater mistake is to believe that we could or should convert the world to our way of living. And yet, we have as a culture resisted, some actively and strenuously, a degree of assent to common beliefs or of shared culture that would make such orientation possible. It is, however, the pursuit of something greater, a rejection of vacant and nurtured and hollow pluralism that will help ensure our continued strength and survival. Sincerely, Alex Karp, CEO and co-founder of Palantir. There you go. Arnie, any reaction to that letter?
It's like it's happening. I love to see, like, the fact that we saw the evolution from the beginning tells us how much skepticism there was, and frankly there is still. But at the end of the day, if you are close to the customers solving value, that is where you have the recipe that can unfold stuff. We were saying before, there are ServiceNow, Salesforce, all these companies showing we are AI, but then neither internally they're really able to do that.
Amir, your thoughts?
Yeah, these ones typically go above my head, and I was busy filling out the Excel sheet. But there was one quote that really caught my attention, and it was the one about like, yeah, like people are now starting to understand, but I'm paraphrasing here, but he's like, yeah, we don't really care. It's not really our problem if no one else catches up to us. Like, we're only caring about, propelling America forward and the West forward. And like, it is like, what was the exact quote? Now I feel stupid because I forgot it. But yeah, something about, not caring about anyone else and just propelling the West forward. That's the only quote I caught.
Yeah,
Matt, say me here. Say something great so people forget that I wasn't paying attention.
Amir is more of a numbers guy.
Yeah, these ones go above my head.
Matt, your reaction to the letter?
I continue to laugh at everything Dr. Karp writes. The chattering class is something that is absolutely hysterical. I'm going to use that because it's not just Palantir, but many other companies. But Palantir, I think, is one of the most obvious cases of people just chattering just for the sake of chattering, which I think is hysterical. So I'm gonna use that and coin that from now on, whether it's in my day-to-day business or other stocks that I cover. But yeah, I mean, I agree with him wholly, and I think that this is one of the main reasons why I continue to follow Dr. Karp, is his unrelenting passion for America first and making sure that we do everything that we can to continue to excel in AI as well as software. And he's trying to help others. He's trying to help allies that are obviously aligned with the United States, but maybe behind due to regulation or whatever. But yeah, his efforts are relentless, and I think people are starting to finally get it.
The presentation is out, by the way.
Okay, Arnie, go ahead.
No, that sentence, our reluctance to abandon constraints has been a principal and driving force of our continued rise. That made me think of something that Eliano posted the other day, replying to a post I made, where essentially he was sharing, look, there are so many things. Palantir is like the first to make it against all dogmas. Like, doing a merge is stupid. Oh, you can't grow that much with a business like that. Oh, it's stupid to defend the US. And here we see the application of also what Elon Musk insists a lot with thinking first principle. Don't let your your dogmas constrain you. And I think all of us here need to be aware that, yes, also all the metrics, valuation are important, but we should not be rigid into thinking, oh no, if this PE is this, then it's expensive. You should need to keep reevaluating everything as if you are studying stuff for the first time.
No, I agree. And look, there was a Fortune article that talked about Palantir's shareholder letters. And basically the thesis of the article was like, this is really weird, but this is what Karp does. No other CEO puts out letters quoting all these philosophers from hundreds of years ago. But Palantir is a different company, right? So like the reason Karp does this, the reason there's this mystique around the company, the reason there's this aura, the reason there's this retail investor army that deeply cares about it. And, Karp mentioned that retail investors have been able to get Silicon Valley venture capital type returns by taking a bet on Palantir at $6, just like an Andreessen Horowitz took a bet on Airbnb, in 2008 when it was worth $1 million. Now it's worth $60 billion. Like, to be able to get those types of returns, you need the most incredible companies on the planet. And you need some of the most incredible execution. And by the way, that execution needs to get a multiple that most companies can't get. And the only way for it to get a multiple, for it to capture the world's imagination, is for them to do it their way. And I think given Karp's authenticity and his unrelenting necessity to steer the company in their way and make the world adapt to them versus them adapt to the world, that is why you're getting this result that you're seeing here today. Now, business results were amazing. Again, stock's up basically 0.5% after hours. I just want to remind people the stock was 170 less than 2 weeks ago. It's at 208. One could argue that the earnings move that was going to happen might have already happened. Tomorrow we're going to see when more volume comes in, but incredible results across the entire business.
Guys, have you seen the net dollar retention rate?
Amir, can you send me the presentation? Because I don't.
Yeah, I'll put it in the chat here. 134%.
Wow.
That dude, that I don't even know what to say. The only thing was commercial customer count was 911, so a bit below what I was expecting. But that just goes to show, like, when you have that kind of scalability. I mean, yeah, we'll go through the whole thing, but that one really stands out. 134 is insanity to me.
It was 120 last time, right? Or 125?
No, 127, I believe.
Okay. Gotcha.
But still, like, imagine that. Even if Palantir didn't get any new customers or revenue from new customers that are like younger than 12 months, they grew 34% just with like customers that have been with them for 12 months or longer. That is insane. Like that just goes to show like how scalable, AIP is. Now it just keeps expanding further and further.
And I know your customer count wasn't exactly what you want, but it's still 45% year over year. Like,
yeah, it's still great. Like, I'm not saying like, oh my god, but like the net dollar retention totally blew it out of the water for me.
crazy.
They added 62 new customers over the quarter. Commercial customer count is up 49% year over year. We'll keep going deeper into the numbers again. NDR at 134 is incredible. Here's Brent Thill. He's never been the most excited about the company's valuation, even though he has, praised the company. So let's get his thoughts, and then we'll keep going from there.
Take for you to perhaps change your tune on Palantir.
Yeah, the fundamentals are rock solid. The valuation is like anything we've ever seen, trading at 90 times revenue. So there's no way you can put any valuation metric on the actual valuation. Again, we've never seen anything like this. The fundamentals, we certainly haven't seen anything like it as well. So to split the two, we've said repeatedly, the fundamentals remain exceptional. The question is this the best place to put your capital? Based on all the other trends that are going on, you can buy Amazon at 15 times EBITDA. You can buy Palantir at 90 times revenue. So we've been arguing that we feel there's a better use of capital in other places. We've been wrong for part of this call on Palantir, but I think we've been right in those other names, just given the valuation concern, and they continue to execute at an incredible high level. So there's nothing to really take away. The government business decelerated a little bit. 52% versus 53 last quarter. If you want to nitpick, obviously the government shut down. What's that going to do to the business? But ultimately, the commercial business is crushing it. They're putting up great numbers. And as Dr. Karp has said repeatedly, we haven't seen numbers like this from a software company. We've covered software for 30 years. There's nothing like this to compare it against.
So if we have nothing like it to compare it against, how do you get to a $60 price target?
25 times revenue, which would be one of the highest multiples in software right now. If you look across the entire industry, the highest multiple in our industry, whether it's Cloudflare, CrowdStrike, these are phenomenal companies that are producing huge returns that trade at those multiples. And so you have to assume that this execution continues consistently for years for that multiple to come down. We've never seen a 90 multiple. And look at the numbers. Why is the stock flat? Because it's flat because the multiple's so high and there's no real room on the multiple expansion to go.
Brent,
So again, I go back to way better other stories in AI to invest in that I have more conviction in.
if I were an investor sitting at home, though, I think I would wonder, is Brent Thill just stuck? I mean, you had the $60 price target. It's over 200. Like, you could double your price target and still have a strong sell on the thing. So how does this work? Like, do you have to stay at 60 just because, in for a penny, in for a pound?
No, I think we look at multiples. We've been doing this for a long time, John. This isn't our first rodeo. So when we saw Snowflake implode, Datadog implode, we weren't on the Snowflake trade. We had a hold, and everyone's like, why don't you have a buy? And ultimately, there's a point where these crack. Palantir has done a phenomenal job. But when you look at so many other names in AI across our tech franchise that we cover, many of these names were up 50 to 100%. So would we like 150, 160% return that Palantir's had year to date? Great. we have a safety net around other names that are up 50 to 100+%. And so again, it's a relative bet. And I think when you look across institutional money managers, they're made the same bet. A lot of our clients have made the wrong bet, not betting with Palantir. And ultimately it comes down to valuation. The retail investor can bet because they don't really know the valuation. They don't know it trades. You can literally take a 60-point multiple between the second highest ranked name, which is Cloudflare or CrowdStrike, and the gap between that and Palantir is like 60. So that it's a number that we don't feel comfortable with.
Okay.
And we feel comfortable again with others. I'm not taking anything away from the fundamentals. Fundamentals are great.
All right. Well, that's why Alex Karp keeps talking about it. Brent Thill, thank you.
Arnie, your thoughts on what Brent said?
Sorry. Okay. I can understand his point because I was reasoning like him when I was just an analyst. So when you talk with institutional clients, they will tell you, okay, but why should I buy this when there are other alternatives? And the alternatives are stuff that for him are easier to understand. With Palantir, I believe that if you haven't captured exactly how insane the business is, you should better just shut up and not pretending to know stuff. Because all the other companies that he mentioned are not able to show what Palantir is doing, is not able to show neither at the product level, neither at a financial level, which is something he should understand. The other companies that he mentions, the ones he likes, are not able to grow this much while also expanding the margin. The stuff that I keep insisting, that is black magic, we can give it a name to this black magic as being able to deploy AI effectively to yourself, to your clients, and all the other companies are not doing that. Imagine this. Already without the the margin expansion that Palantir is having, seeing this acceleration in the revenue is already crazy. The fact that the margins essentially more than doubled in these years, while having a lot of growth, is just out of the mind. It's like having an infinite return on investment on the capital. And with that, I think I like his point is reasonable into, okay, this is very expensive compared with all the other companies. But guess what? What is the rule of 40 of Palantir compared with all the other stuff? Like we see that in the presentation, right?
Yeah.
I don't know if you can show it from here.
I believe Rule of 40 is at 114, but essentially your argument, Arnie, here is that it's a different company that's not trading like any other software company, and that's why it's getting a different multiple.
Yes, like it is trading at a different multiple, but it is trading for at a different multiple for a good reason.
Yeah,
it's a complete outlier. How do you price an outlier? With an outlier price. And this, look at his argument essentially is worth only under the condition that Palantir is not able to sustain this level of growth and margin. Right. What if actually he's wrong and we see this trend keep reinforcing itself due to all the companies in the world now see Palantir and see, holy shish, this is the only company that says AI. Is it delivering AI to itself and to the customers? Okay, maybe let's make a call. While before they were skeptical, now at least you need to make a call. If you don't make a call, you're stupid.
Yeah, it's the classic example. Amazon, these companies were very, very expensive. Now, maybe Palantir is in a league of their own, but it's not like we haven't seen this playbook before in technology. Companies were very expensive. They sacrificed profitability for growth. At this point, Palantir is not sacrificing anything. And they eventually grew into the valuation. And so, again, to your point, Arnie, they have 900 customers. This will be 9,000 one day. And so you can debate the valuation.
Databricks. 10,000.
Right. I mean, Palantir is doing similar revenue, if not more than some of those other companies on literally 1/10 of the customer count. So he is right that the stock is expensive. No one's denying that, but the stock has been expensive for a very long time. The question is, why does it continue getting expensive? And I really don't think the stock went from 100 to 200 because of retail investors. Like, I just refuse to believe hundreds of billions of dollars in market cap were added because of people in retail. I think there was a large institutional understanding of the story, and they decided to buy in. And now you have to ask yourself, why would the institutions sell it off? And there could be tons of reasons why institutions sell, but at its core, these numbers do not give you a fundamental reason why you would see institutions take profits here, unless they don't think the growth can continue. But if it can, then that's why this multiple likely is able to stay for Palantir.
As you say, let's imagine you are an institutional investor. You may trim a little bit just to say, okay, I keep some profits, but would you really sell the position? Why?
Right. Matt, go ahead.
Say share-based compensation may be increasing at $170 million, but overall, the total amount of shares has decreased almost substantially, where on an annualized basis, we're barely crossing over 1%, which I think is huge to kind of note. Part of that is obviously because the company has grown so massive in terms of market cap, but also the fact that they have been trying to normalize share-based compensation as a whole. But if you look at it, I think they only increased 8 million shares or 9 million shares quarter over quarter. And if you kind of look at that, I mean, over a 2.5, 2.6 billion fully diluted share count, that's pretty low in terms of the amount of shares added. So if that trend kind of persists and it continues to slow down, then eventually these guys might be able to catch up and actually start reducing shares, which is something that I don't think if you talked about a year or two ago, people would have actually ever believed.
I think Mr. Brent was kind of contradicting himself like throughout that whole thing. Like he starts off with, okay, well, we've been kind of mostly wrong on this one. I'm like, dude, when were you ever right on Palantir? Like you never. What do you mean mostly wrong? You were never right on this. And then they're like, we've never seen a multiple like this. The same thing that he said on CNBC for probably like 4 quarters in a row now. And then they're like, well, why is it like that? He's like, well, I've never seen a business like this either. I'm like, yeah, are you starting to put 2 and 2 together now after I don't know how many years of tracking Palantir? Like, you shouldn't even try to make sense of the multiple. You should try it. If you want to do the work, you should try to make sense of the valuation, but you're not even doing that. But still, like, put 2 and 2 together. I've never seen a multiple like this. And then you're like, I also never seen a business like this. I don't know, man. They're kind of the best business. Like, they're kind of killing it. I'm like, yeah. Are you starting to get it, Brent? No.
That's like, only your job.
And then they're like, well, you have $60 price target. How do you get there? Like 25 multiple, which is still, pretty high. I'm like, okay. That's like, even if they said it, like, even if you double it, it's still a strong sell. Like, even if you 4x it, it's like, fair value. But still, like, doesn't he listen to himself? Like, a 25x multiple for a business that he can't even categorize of like what kind of business they are, how good they are, like unprecedented, godlike kind of business that he's been tracking. And he still doesn't get it. This is the kind of analyst that makes me understand why Palantir stopped inviting more analysts onto the calls, even though I want, as many as possible. Even Brent, he's been on there historically. But I mean, you could tape like his CNBC appearance from like 3 quarters ago, and you could just like play that over. It's like the same thing. He said nothing about the business ever. Like I've been reading out of the sell side equity research reports. Everything they talk about is just the multiple. They never discuss like core parts of the business. Very rarely you will see some do it or highlight some kind of deals, but no one really shows that, like, yeah, we kind of understand Palantir. Like, no one. That's why I still believe like we're still kind of early into the whole Palantir story. Like, they don't get it at all. And I was just laughing throughout. I'm like, dude, you're contradicting yourself throughout this whole thing. It's the same thing, like the same script that you've been had. Like, why did they even put you on? Like, put someone else on to cover Palantir. At least we'll get a fresh perspective. Like, you're just parroting yourself at this point. It's kind of funny.
Yeah, I think one thing also that's important, the dig he took at retail investors is kind of funny, because it's like, he is the guy who gets paid a very nice salary with a very nice bonus with all his juicy health benefits to recommend to clients what stock to buy. And since this thing was $20, he's been telling them to not buy it. And it is done very well for the retail investor, who apparently is so stupid they don't understand what the valuation is of what they're buying, versus the institutional guy who's supposed to be telling all of his clients at Jefferies to stay away from the stock. So you got to take it with a grain of salt, because these guys intrinsically have a motivation that is rudimentary against what retail has been able to do in terms of our due diligence of the company, because quite frankly, they have not done good analysis. And as a result, the stock prices disagreed with them. But I can understand, to your point, Arnie, his line of thinking. It's just, there's a lot of other qualitative elements to the story of Palantir that are not just rooted in looking at Amazon's EBITDA multiple, as his comparison is, versus the overall story of Palantir and the trajectory of their growth. And so there's a difference of opinions. That's what makes a market. But obviously, people that saw that story and believed in that story, most importantly, believed in Alex Karp, they've been the ones to benefit.
Look, I think the big issue is trying to think of Palantir as just another software company. If you look at it from the angle as if you were evaluating Snowflake, Datadog, these other companies that he likes, yes, Palantir is untouchable. But if you don't understand we're talking about a company of a different league, then you're not a good analyst. Then I can also understand that if you were so bullish on all these other tier 2 companies, and then you completely miss the God tire, then it's so hard to say, okay, guys, I completely missed the God. But if I accept there is a God, it means you are just useless crap software. He can't sell that idea to its clients, because his entire reputation was built into pushing these other companies.
Right. It's a fair point. It's a fair point. It's hard to swallow the pill when you're wrong, but and if you don't swallow that pill, then obviously you've got to fight against the pill in the first place versus just deciding to take it. We got about 17 minutes until the call starts. They have 6.4 billion in cash. Amir, I'll ask you the same question I asked you on Weekly, but any thoughts of what you think they should now do with almost 7 billion on the balance sheet?
No, just keep chilling in treasuries for now. Keep a lookout, with the FedRAMP customers, if there's something interesting there that aligns with your values and something that you can pick up and invest in early. Perhaps maybe the Anduril thing, the same thing that we've been talking about throughout, these weeklies that we've been having historically. But yeah, there are some crazy numbers. I don't know if you've been covering it. 337% growth in US commercial TCV. I think the presentation says a bit slightly higher due to rounding, like 340% or something. Completely crazy. Overall TCV, how we mentioned that 143% last quarter was crazy? This quarter was 154.5%, like 2.8 billion in contract value signed during Q3. That is like insane. Just for one quarter, they almost signed, contract value worth of almost like their annual revenue just in one quarter, and it is accelerating and growing like 154%. That is just insane. Another one that is quite massive to me. Deals above $1 million grew 96% year over year and 30% quarter over quarter. They hit 204 new deals above $1 million, and it's basically an all-time high across all the segments. 53 deals of at least 10 million. So it could be 10, it could be 500 million. All-time high across all segments. So that was also really, really impressive how that's picking up, so quickly. Everything is just accelerating across the whole business.
By the way, folks, we got some breaking news. It looks like we have a new short on Palantir. Michael Burry.
Burry? Really?
Michael Burry has shorts on, puts, I shouldn't say shorts, puts on NVIDIA and Palantir. Now, they were disclosed today. I don't know if that means, you know, he obviously didn't put them on literally today if they're disclosed today. He bought Molina, Lulu, and SLM. He added 100% to a Lululemon. Molina is a healthcare company, and then SLM, he bought 480,000 shares. This was just disclosed today, November 3rd, and then puts on NVIDIA and the Palantir.
That calls on Halliburton. Sorry.
Just kind of, that's a snapshot at the last day of Q3 of his portfolio. It's just that he filed it today, but that's his 13F filing for the previous quarter. So as of, I think, 31st or 30th of September, that's a snapshot of his portfolio at that time. But we don't know when he actually, you know, got into the position. So we can't know for sure, but that's just a snapshot as of a few days ago. That is crazy. Barry put on Palantir? Never crossed my mind that he would be doing that. He has been doing some cryptic tweeting lately, though. So, I don't know. Luckily, he hasn't been very right as of late. He's been quite wrong on many of his, you know, sell everything and then buy everything. Actually, I saw that he's actually outperforming the S&P 500 this year. But yeah, that's quite an interesting one.
Yeah, wanted to get back to the cash pile piece. So they didn't break it down on a quarterly basis, but at least through the year, based off of the first 9 months, in the 8Q that they disclosed, they've purchased, what was it, $6.1 billion worth of marketable securities, which I assume to be T-bills, and they've sold $4.3 billion. So I assume selling some of the T-bills that are maturing and or that have already kind of gone up in price to help use that to purchase additional T-bills, hopefully out in time. But I'm curious to see. I haven't checked comparatively to what it was last quarter, but I assume it's up pretty significantly. So I'm curious to see what the statement is, particularly around what they're doing with the cash pile.
Yeah, I mean, I'm pretty comfortable with them just putting that cash into treasuries and not taking too much risk. I do not want them to buy Bitcoin or gold or anything crazy. So it's a great balance sheet to have. And I don't know, did they disclose that they bought back stock this quarter? I don't think they did.
19 million.
So,
yeah, 19 million's worth, but it doesn't say how many shares. So that's what I'm looking for. Is how many shares. Million.
Yeah, so whenever they do really want to start buying back stock, I mean, they have plenty of cash to be able to do that. There was no split announced. I know there were some rumors. People were thinking there was going to be a split. There was no split announced, so you're not going to see that for Palantir. We got the call out in 12 minutes. Arnie, I'll start with you. If you did have a question on the call, what would your question be based on this quarter?
I need to think of it. Ask someone else.
Here, you have a question ready to go?
No, let's give us 5 minutes and let's all put our brains together and come up with some good questions. Didn't think of
it's
one.
hard to find something that doesn't work
like this, you know. It's kind of.
I mean, my question would be pretty easy. I would just be international growth, right? Because that is the one sector that is not massively scaled, obviously, like U.S. commercial. We saw they had a partnership with the Department of Ministry, the Ministry of Defense in Poland. They got the UK Ministry of Defense for $1 billion. Fujitsu and Sompo expanded their partnerships in Q3. So I would be curious to say, when do they think the tides are going to change, even if it's just sociologically via the attitudes of Europe, to start adopting or embracing AI software? I mean, the fact that Maven 90 days ago got integrated into NATO seems like a relatively big deal. The Poland partnership also very important. So you would imagine that more and more countries are recognizing, at least their governments are recognizing, this is really important to have. And then if their commercial enterprises could start adopting it as well, that could be another S curve that none of us are thinking about.
Let me. Okay, just quickly, the numbers for this quarter. I don't know if they disclosed it, but I calculated it. Non-US government grew 66%.
I was going to say that.
Yes,
it's like
and commercial 9.3, which is kind of massive, given that we've been like negative for like a couple of quarters in a row. So I mean, it is kind of happening. Go ahead.
Well, what is the absolute dollars on that 66%?
147 million.
That's
And
not crazy. That's not
U.S.
crazy.
government is 486.
Well, so if I ask that question, I think that's what their response would be. It would be like, hey, we grew non-U.S. government 66%. It's a small base, but that is growing. If that continues, then that's going to be closing in on $500 million by the end of next year.
I'd maybe this is selfish. Sorry, do you want Arden to go? Go ahead.
No, go ahead, Matt. Go.
I was just say maybe this is selfish, but one of the things that I'm obviously looking at pretty regularly is space, and I know that the Golden Dome contract is something that Palantir has been rumored to be a part of, and we know that Palantir in the past has had customers like Black Sky, which is a kind of a satellite imagery company. So I'm curious to see if this is still another vertical. Obviously, we have a multitude of different defense systems that talk to each other, and obviously having a central operating system around that, specifically kind of like the Golden Dome. What potential do we see, and what kind of size project would that be, and what kind of run rate? And obviously that would have high margins, obviously, as well. But I'm kind of curious when they would anticipate something like that, because obviously you could build the satellites, but being able to communicate across all the different companies would be a massive challenge. So having that kind of Space Force contract around understanding and getting data across a multitude of different satellites and hardware, that obviously has its own ontology that needs to be in use to be able to organize all the data and ensure safety. So I'm kind of curious, where they're at with that.
You know what I would ask? In this last period, we had so many partnerships, but we also had some partnerships with companies that we tended to see as enemies, in particular Snowflake and Databricks, right? I would be curious to understand better what's the rationale behind these deals. Maybe there are some things that we failed to grasp so that we could appreciate what we could see from these partnerships emerging.
Yeah, so basically they've started introducing a lot of new partnerships with other software providers because one of the biggest issues with Palantir is this whole vendor lock-in issue, right? Like where like companies are afraid to use them because they don't want to be locked into just Foundry. And Chad has been talking a lot more about, hey, like if you're on Snowflake or Databricks, you can work with Palantir without having to be just in Palantir. And those strategic partnerships, I would imagine from a go-to-market perspective, are going to be very valuable as more and more customers that are already on those platforms don't have to leave them.
Like it seems very linked to multimodal plane.
Yeah, MMDP.
But I with that I still struggle to see the entire picture. So I think that it is very valuable. I would love for them to share more. What's the idea?
Yeah, multimodal data plane, as Chad has said before.
So I guess my question would be, give Dan Ives his flowers. He's been asking about boot camps for I don't know how many quarters in a row. But I think I'm kind of curious how boot camps have evolved. How many have they run? I think they have run enough once, far enough back where they can actually kind of start to answer Dan Ives' question about, conversion rates. Historically, when boot camps were new, we got, reports of, okay, this quarter we ran this many boot camps, next quarter we ran this many, and that like doubled quarter over quarter for like 4 quarters in a row. But then like we haven't really heard much about it. So I don't even know, like, have they evolved on how they run them? Like, what's the scalability? Is it mostly run by like the consultancy partnerships now? Like, what does that look like right now? Because it isn't really converting into absolute customer count numbers. Now we know that they do boot camps with current customers as well. That's why we see this scalability. I mean, they are being introduced to like what they can do with the AIP and stuff. So obviously, what that 134 net dollar retention rate is likely as a result of boot camps as well. But I'm kind of curious, like, what kind of conversion rates are they seeing? How they evolve? What do they look like now? How scalable is it? That kind of thing. So maybe Dan Ice this quarter will have his question answered. Let's see.
Yeah, I agree. I think that the boot camp was part of the evolution with AIPCon or AIP as a product back in 2023 that kind of changed everything. And there's been these pivotal moments throughout the life cycle of Palantir that have defined the company's growth trajectory. And AIP back in June of 2023, that's also when I think Chad joined the company. So, maybe that's the reason why Palantir is 20x since then. But AIP was like, oh, they're embracing AI. And then boot camps was, oh, they're figuring it out sales and distribution. And the biggest concerns we had when we were doing Palantir Weekly 2.5 years ago was they can't sell. And where's the product that really ushers them into the age of AI? And it's here. AIP, boot camps as the go-to-market, and the evolution of those two over the past couple of years, along with Palantir's brand. I mean, the amount of inbound Palantir was getting every day after Jensen Huang says that, Palantir is the single most important software company in the world. Chad says I'm glazing too much, but it's true. Or when Trump is shaking hands with Alex Karp. I mean, like, you would imagine a lot of companies and governments around the world are like, maybe we should give a call to Palantir and at least have a conversation. And that likely translates to business results.
And you remember, sorry, we had this conversation already a couple of years ago. There was a big issue back then when Palantir wanted to have more visibility, or had some toxic visibility that was not expecting at the meme period. There was an issue. They had visibility, but they couldn't really translate that visibility into business because the business was just slow. It was too reliant on FDs making a lot of long pilots. But now with bootcamps, AI FD, like the process of transforming visibility into deals is insane. So with these strategical deals like NVIDIA, we can expect we have the basis to keep this momentum rolling.
Yeah. And, that NVIDIA growth quarter back in May of 2023 changed the trajectory of their company. And it seems like we're starting to get some of those growth quarters coming in for Palantir. I mean, dude, we were growing at 15% a couple years ago. That's at 63.
Emir, can you help me double check a thing on the outlook, please? Because if I put the numbers of the outlook for the year and I imply what is expected in Q4, I start having weird numbers.
What number is it? The quarter?
Yes. Like if I put as an input the...
But what did they say?
Like they say that they will get 4.4 billion in revenue for 2025 and 2 billion of adjusted income.
So that means 1.331 billion for Q4, which is another 60% year over year. Or what was your question?
Okay, no, so I probably put some numbers wrong.
So it's 4.4 billion for fiscal year 2025. That means 1.331 billion in Q4. So 60.9%, basically 61% year over year. Which, I mean, what did they guide for in Q3? Like above 50%, and they did 63. So I mean, if they're already guiding for like 61% for next quarter, like, dude, they're totally gonna hit the carbs for 4.5, like, for sure. And
good afternoon.
I just know.
All right, call is live. Here we go.
I'd like to welcome you to our third quarter 2025 earnings call. We'll be discussing the results announced in our press release issued after the market close and posted on our investor relations website. During the call, we will make statements regarding our business that may be considered forward-looking within applicable securities laws, including statements regarding our fourth quarter and fiscal 2025 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which could cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shams Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
We had a monumental third quarter, shattering expectations yet again. Our overall revenue grew 63% year over year and 18% sequentially. We outperformed across the board, driven by strong execution in the US, which accounted for 3/4 of our business in Q3, growing 77% year over year and 20% sequentially. Our Rule of 40 score soared to an unprecedented 114, up 46 points year over year and a full 20 points since last quarter alone, reinforcing our position as the defining enterprise software company of our generation. Our US commercial business grew an incredible 121% year over year and 29% sequentially, driven both by insatiable demand and the quantified exceptionalism compelling customers to scale AIP across their operations. Organizations are embracing an undeniable truth. Real enterprise AI at scale requires Palantir. We're seeing that AIP, again and again, is the only platform delivering transformational impact in this market. And critically, AIP is the only AI platform that has an actual plan for compounding your enterprise's AI leverage, not just the model maker's leverage over you. Sharing this leverage with our customers is our highest priority. Our whole company is singularly focused around value creation for our customers, and I'm proud to share with you all the fruits of our labor. We closed our highest TCV quarter ever at $2.8 billion. Underlying this performance, we closed a staggering 204 deals worth $1 million or more, of which 91 deals were worth $5 million or more, and 53 deals were worth $10 million or more. In our US commercial business, which now accounts for 34% of our overall revenue, we closed $1.3 billion in TCV, a milestone achievement for the fastest growing area of our business, with a more than 6x year-over-year growth rate on a dollar-weighted duration basis. The trajectory is clear. Customers are converting to larger enterprise agreements in short timeframes, reflecting both the expanding scope of their AI ambitions and the immediate impact our software delivers. A leading medical device manufacturer signed a multi-year expansion just 5 months after their initial contract, increasing ACV more than 8-fold. 2 weeks into their initial contract, the conversation evolved from a single use case to pursuing the opportunity of becoming an AI-first enterprise. Their CEO approached me to embrace a shared vision for an enterprise-wide AIP deployment to transform their entire organization. This transformation reflects a broader pattern we're seeing across our customer base. AI is a strategic imperative owned at the C-suite level, with executive leadership recognizing that enterprise-wide AI adoption is the defining factor separating the AI haves and the AI have-nots. We're seeing C-suite-driven AI transformations across our customers. At a leading insurance company, the CEO has taken personal ownership of their AI transformation, meeting with our team regularly to orchestrate a company-wide transformation around AIP, reimagining every function from underwriting to claims processing, leading to a significant expansion of our work together. Our partnership with TWG Global, named Vergence.ai, continues to gain momentum. As TWG's Thomas Toll noted, quote, "What was once a competitive advantage is now a competitive necessity. Companies that fail to incorporate AI into their core operations will be outpaced by those that do. These examples underscore what we are seeing. We are the only platform bringing true transformational impact to the enterprise AI market. Turning to our US government business, revenue grew 52% year over year and 14% sequentially as we continue to deliver mission-critical capabilities. We remain deeply committed to our founding mission of supporting the US government, honored by the privilege of equipping our nation with transformative software that actually works. We remain focused on delivering the most advanced defense capabilities in the world to the US government and internationally to our allied partners around the world. The momentum we're carrying into Q4 is extraordinary. As we look towards the end of the year, our mission is clear. Deliver the production capabilities that turn AI from promise into performance for the enterprises defining the future of their industries through AIP's compounding AI leverage. I'll now turn it over to Shyam.
Thanks, Ryan. 20 years of grinding has built a unique moat and a growing lead. Our products were built for this moment, and the numbers continue to show it. Realizing value from AI in the enterprise requires the elegant integration of LLMs, workflow, and software. And this is only possible with Ontology. Our foundational investments in Ontology and infrastructure have positioned us to uniquely deliver on AI demand now and in the world ahead. The most significant product developments are the accelerating progress in our AI applications inside of AIP. AI FDE, our AIP native development agent that understands how to connect to data sources, how to integrate and transform data, how to create ontologies and functions and build applications. It's unleashing incredible speed and productivity for our FDEs and customer developers alike. At one customer, 2 human FDEs spawned an army of AI FDEs to migrate a customer off their legacy data warehouse in 5 days, something that would have taken an army of SIs up to 2 years. This is not a prototype, this is production. Across our customers, the results are shocking. AI HiveMind is a new AIP capability that orchestrates a swarm of dynamically generated agents to tackle hard problem solving, idea generation and refinement, and executable proposal generation that is integrated with Ontology and therefore aware of the context of your enterprise. AI HiveMind was originally developed to solve extremely complex problems in the classified space, but it's already been used to help our commercial customers identify bottlenecks in their supply chain, proactively developing possible solutions, and then leveraging AI FDE to code that up into an actual solution. In the government space, AI HiveMind is able to take its proposals and generate intricate mission plans right in Gaia and Maverick. Our focus with AIP continues to be enterprise autonomy, our normative view of where the value is for AI in the enterprise. HiveMind now lets the AI develop novel solutions to emergent challenges and to identify hidden opportunities. And the rest of AIP enables you to turn those ideas into an implemented reality. Closed-loop evolution of the business with AI possible because of AIP and Ontology. We continue to make investments that allow enterprises to extend AIP to the far edge. Edge Ontology is a new lightweight implementation of Ontology that runs on mobile devices and enables customers to build mobile applications or embedded software for hardware, things like drones and robots, and is fully integrated with your enterprise's AIP instance. Turning to field-facing updates, the U.S. Army issued an official public memo directing all Army organizations to consolidate and centralize on Vantage, the Army data platform built on Foundry and AIP. The Army views this not merely as a technical decision, but a cultural decision, enabling the data-driven decision-making that continues to make our Army the most lethal in the world. This directive will enable the Army to rapidly sunset legacy systems and enable more investment in the Army's future force, concept, and systems. Warp Speed and the American Tech Fellowship, our early investments to support manufacturing and reindustrialization in America, are bearing fruit. While Warp Speed launched by helping new defense entrants meet their surging production goals, it's now being rapidly adopted across the traditional defense industrial base and the maritime industrial base. The second cohort of the American Tech Fellowship will be wrapping up in the next few weeks. We started the American Tech Fellowship because we noticed that many of our best builders were frontline workers. They don't come from conventional consulting backgrounds. They don't have formal computer science backgrounds. To highlight a few of these folks, Mason, a Louisiana-based civil engineer, is building AI applications for more accurate estimates for heavy construction projects, something that is only going to grow with our reindustrialization. Michael, who works for a potato farm in North Dakota, is streamlining its operations. And Cody from Georgia, who is a utilities expert, is building in Foundry to deliver safe, reliable energy across the South. These Americans are the true face of innovation, underscoring that it will be the American worker with AI that drives reindustrialization and American prosperity. Our customers have taken notice and asked us to create American Tech Fellowship programs for their employees specifically, to include Lear, who highlighted their fellowship in their recent earnings call. With that, I'll turn it over to Dave to take us through the numbers.
Thanks, Sean. We had an outstanding third quarter, achieving a Rule of 40 score of 114, our highest ever, by 20 points. We also generated our highest ever reported revenue growth rate of 63% year over year, exceeding the high end of our prior guidance by 1,300 basis points and representing a 3,300 basis point increase compared to the growth rate in Q3 of last year. On the back of this extraordinary strength, we are guiding to revenue of $1.329 billion in the fourth quarter, representing 13% growth quarter over quarter, our highest ever sequential revenue growth guide, and 61% growth year over year. We're also raising our full year 2025 revenue guidance midpoint to $4.398 billion, representing a 53% year over year growth rate, an 8-point or $252 million increase over our full year 2025 revenue guidance last quarter. In addition, we're raising our full year U.S. commercial revenue guidance to an excess of $1.433 billion, representing a growth rate of at least 104% year over year, a 19-point increase over the guidance we gave just last quarter. Accelerating demand for AIP continues to drive the outperformance in our U.S. business overall, which grew 77% year over year and 20% sequentially in the third quarter. Our U.S. commercial business grew 121% year over year and 29% sequentially, and our U.S. government business grew 52% year over year and 14% sequentially. We delivered these exceptional top-line results while also achieving our highest ever reported adjusted operating margin of 51%, exceeding the high end of our prior guidance by 500 basis points and highlighting the unit economics of our business at scale. Our revenue and profitability drove a 20-point sequential increase to our Rule of 40 score from 94 in the second quarter to 114 in the third quarter. On a trailing 12-month basis, we generated $2 billion in adjusted free cash flow for the first time in the company's history. Turning to our global top-line results, third quarter revenue grew 63% year over year and 18% sequentially to $1.181 billion. Third quarter U.S. revenue grew 77% year over year and 20% sequentially to $883 million. Excluding the impact of revenue from strategic commercial contracts, third quarter revenue grew 65% year over year and 18% sequentially, and third quarter U.S. revenue grew 78% year over year and 20% sequentially. We closed our highest ever quarter of TCV bookings at $2.8 billion, up 151% year over year. This eclipses our prior highest quarter of TCV bookings just last quarter by nearly $500 million. Customer count grew 45% year over year and 7% sequentially to 911 customers. Revenue from our largest customers continues to expand. Third quarter trailing 12-month revenue from our top 20 customers increased 38% year over year to $83 million per customer. Now moving to our commercial segment. Third quarter commercial revenue grew 73% year over year and 22% sequentially to $548 million. This is the fourth consecutive quarter that revenue from our commercial business has been larger than our U.S. government business. Excluding the impact from strategic commercial contracts, third quarter commercial revenue grew 77% year over year and 22% sequentially. We closed $1.4 billion in commercial TCV bookings, representing 132% growth year over year and 32% sequentially. AIP continues to drive existing customer expansions and new customer conversions in the U.S. Third quarter U.S. commercial revenue grew 121% year over year and 29% sequentially to $397 million. Excluding revenue from strategic commercial contracts, third quarter U.S. commercial revenue grew 126% year over year and 29% sequentially. In the third quarter, we closed $1.3 billion of U.S. commercial TCV bookings, representing growth of 342% year over year and surpassing the billion-dollar mark for the first time. Over the past 12 months, we closed $3.8 billion of U.S. commercial TCV bookings, a 217% increase from the prior 12 months, highlighting the demand for AI production use cases. Total remaining deal value in our U.S. commercial business grew 199% year over year and 30% sequentially. Our U.S. commercial customer count grew to 530 customers, reflecting growth of 65% year over year and 9% sequentially. Third quarter international commercial revenue grew 10% year over year and 5% sequentially to $152 million. For international commercial business, we continue to capitalize on targeted growth opportunities in Asia, the Middle East, and beyond, but remain focused on accelerating the growth in our U.S. business. Revenue from strategic commercial contracts was $2.9 million for the quarter. We anticipate fourth quarter 2025 revenue from these contracts to be between $2 to $4 million, compared to $9.6 million in the fourth quarter of 2024. We anticipate 2025 revenue from these contracts to be less than half of 1% of full year revenue. Shifting to our government segment, third quarter government revenue grew 55% year over year and 14% sequentially to $633 million. Third quarter U.S. government revenue grew 52% year over year and 14% sequentially to $486 million. This growth was driven by continued execution in existing programs and new awards, reflecting the growing demand for AI in our government software offerings. Third quarter international government revenue grew 66% year over year and 16% sequentially to $147 million, bolstered primarily by our continued work in the UK. As previously mentioned, we closed our highest ever quarter of TCV bookings at $2.8 billion, up 151% year over year. Net dollar retention was 134%, an increase of 600 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q3 of last year, as we see the effect of the AI revolution. As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our U.S. business over the past year. We ended the third quarter with $8.6 billion in total remaining deal value, an increase of 91% year over year and 21% sequentially, and $2.6 billion in remaining performance obligations, an increase of 66% year over year and 8% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 84% for the quarter. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $601 million, representing adjusted operating margin of 51%. Q3 adjusted expense was $581 million, up 8% sequentially and 29% year over year, primarily driven by our continued investment in AIP and technical hiring. We continue to expect expenses to increase in the fourth quarter as we remain committed to investing in the product pipeline and the most elite technical talent, all while delivering on our goals of sustained GAAP profitability. Third quarter GAAP operating income was $393 million, representing a 33% margin. Third quarter GAAP net income was $476 million, representing a 40% margin. Third quarter stock-based compensation expense was $172 million, and equity-related employer payroll tax expense was $35 million. Third quarter GAAP earnings per share was 18 cents. Third quarter adjusted earnings per share was 21 cents. Additionally, our combined revenue growth and adjusted operating margin accelerated to 114% in the third quarter, a 20-point increase to our Rule of 40 score from the prior quarter and our 9th consecutive quarter of an expanding Rule of 40 score. With the increase in our 2025 revenue and adjusted operating income guidance, we are now guiding to a Rule of 40 score of 102% for the full year. Turning to our cash flow. In the third quarter, we generated $508 million in cash from operations and $540 million in adjusted free cash flow, representing margins of 43% and 46% respectively. Additionally, we achieved $2 billion in trailing 12-month adjusted free cash flow for the first time. Through the end of the third quarter, we repurchased approximately 2.6 million shares as part of our share repurchase program. As of the end of the quarter, we have $880 million remaining of the original authorization. We ended the quarter with $6.4 billion in cash, cash equivalents, and short-term U.S. Treasury securities. Now turning to our outlook. For Q4 2025, we expect revenue of between $1.327 and $1.331 billion, and adjusted income from operations of between $695 and $699 million. For full year 2025, we are raising our revenue guidance to between $4.396 and $4.400 billion. We are raising our U.S. commercial revenue guidance to an excess of $1.433 billion, representing a growth rate of at least 104%. We are raising our adjusted income from operations guidance to between $2.151 and $2.155 billion. We are raising our adjusted free cash flow guidance to between $1.9 and $2.1 billion. And we continue to expect GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Greetings. By any normal or even reasonable standard, these are not normal results. These are not even strong results. These aren't extraordinary results. These are arguably the best results that any software company has ever delivered. That's not hyperbolic, despite what your analyst friends may want you to believe, because they've been wrong at every price. They're wrong on at every single round. But of course, they're persuasive, and they're not investing their own money. But a normal enterprise company should not have a rule of 40 above 100. A normal enterprise company at our base should not have over 100% U.S. commercial growth, should not have 77% growth in the U.S. And by the way, that growth is being held down by a stagnant Europe, which is still a significant part of our business. So the pure unvarnished numbers are 77% growth off of a massive, significant base with very significant cash flow, with a company that throws off a rule of 40 of 114. And then if this world was at all sane, every single person in the financial world would stop and say, how did this happen? How did a company which stood by the American warfighter, Marines, special operators, people in clandestine services, who stood up for our right of free speech and was really the first company to be completely anti-woke, how did this company stick up for the American warfighter, actually give normal Americans venture quality results? So one of the issues we have with the arbiters of truth is it was the American worker that we supported and the American worker that we helped make rich. And the arbiters of truth somehow did not participate in that because they were such experts. And of course, but what these numbers show is doing that and taking the American worker along with it, and doing it in a way that foreshadowed the future. FDE, Ontology, Foundry, making each specific institution, making the American warfighter fight the way the American warfighter is born to fight, empowering the tenets of being, free and having the ability to do creative things in the battlefield context, and then taking enterprises, instead of selling them commodity parasitic software with a massive sales force, with a kind of lumbering, jargon-bearing leaders offering you steaks and dinners and other things we shall not mention, in order that you turn the high value revenue of your enterprise over to them in return for these accolades. We created direct alignment with our customers. And what does that mean? It means when our customers have a unique and tribal way of doing something, whether it's underwriting or fighting or making workers even more valuable, we put an FDA, we orchestrated an ontology, we take the tribal understanding of their business, the specific nature of their business that makes them particular and valuable and lethal, and we empower that. And how do we participate in that? Unlike seemingly in the most obvious way, we are downstream from the value creation. So when you see 141 or you see 77% or 63, and you ask, and by the way, with really a workforce that is not growing in any way linearly proportional to that growth, and also with a sales force which is declining, which seems improbable, the reason why that's working is because we are making our clients more money, or we're making them more dominant on the battlefield, and they're paying us a subset of that. And And this is why these numbers are so extraordinary. The sociological and political version of this should be, wait a minute, how can we learn from this? How can we implement institutions? By the way, we have all these people talking about an AI bubble. I'll tell you what 114 proves. There is a massive part of the AI market that actually cares about value creation, and that's the part we own. And we own that part because to do this, you have to have FD orchestration, you have to have ontology, and you have to have Foundry, and you have to have access to the game. And you have to have deep understanding of how to do that. And you have to have done this for a very, very long time with products. By the way, and then the products are getting better and better and better and better. And I'll let Sham talk about what we're doing on the battlefield to the extent that he can, but you see the very similar trajectory where we're giving America, both in industry and in government, a massive unfair advantage. And again, you see it, like if you look at our numbers, look at how poorly Europe is doing. Look how well America's doing. Look how we're doing this. And again, it's not just top line. The rule of 114 that we have shows top line and bottom line growth that is distinctive, massive, and unique. And on top of everything else, there is this issue in the U.S. that we're all focused on at Palantir, which is what portion of the GDP growth that we're blessed to have in this country, meaning GDP growth defined or helped out and bolstered by AI, what percentage of that is available to the American worker? And so when we're AI GDP availability for the American worker, meaning do they participate in this growth, or is it just people around this table who are getting richer and richer? And then you see our platform on the battlefield, as Sham was mentioning, the people doing the coding in AIP are vocationally trained, smart Americans with specific knowledge. They don't have, and actually, and the people on the factory floor, very same thing. People across the nation, truck drivers, anybody with specific domain expertise is more powerful, more valuable in our product than they were yesterday. In fact, the real misalignment of AI is with people with commodity, like high-trained, elite institution, general specialist. That's just not as valuable as it was. And yes, the destructive, positive destruction of capitalism is going to put that class of people, typically the class of people that also is kind of skeptical of Palantir, under enormous pressure. But it is what I see in these numbers, and what I think we see in these numbers is, to put it slightly over the top. Well, yeah, we were right, you were wrong, and we are going to go very, very deep on our rightness because it is exceedingly good for America. It's exceedingly good for the American economy. It's as good for American workers. And you know what? I really enjoy turning on TV and seeing some analysts explain why some other company is better than ours simply because they didn't make any money on our company and probably aren't. And we're just going to keep going and going and going. And then we're obviously not going to forecast for next year, but I would say, if you're thinking about how this company is going to go, look at our ability to value create, look at our ability to create revenue on the top end, look at the unit economics of our business. If you're a technical expert in how do you evaluate business, evaluate those numbers against any other business you've ever seen, and then make your decision. But yeah, I'm wildly enthusiastic. I think we're wildly enthusiastic. And thank you for those of you who stayed with us to enjoy these numbers, especially Palantirians who work day and night to deliver these kind of numbers.
Thank you, Alex. We'll now turn to questions from our shareholders before opening up the call. We received a few questions asking, what do you see as Palantir's unique differentiator that others may not understand?
Well, Alex mentioned a bit of this here. It's become fashionable, actually, for lots of companies to start hiring FDEs. The Financial Times had an article about how it's the most popular new job title. But what you see is that they don't really understand it. It's just mimetic. And everything Alex just said, we build software that works, not software that ought to work. We build software for the world as it exists, not a world that never was. And this ability to find what's true, that comes from the FDE. Our measure of success is not did we sell the software, it's did we solve the problem. And we have built an entire software stack over 2 decades downstream of creating value for our customers. That led to the ontology a decade ago, more than a decade ago, which is a fundamental prerequisite to getting value out of LLMs in the enterprise. And this past year, it led to AI Hivemind and AI FDE.
The other thing, which is implicit in that, is the way we work forces us to go up the chain of complexity every day. So we're taking on the most painful, most integral, most valuable parts of the stack in every enterprise. And it's precisely because that's the way we actually lever our ability to deploy and orchestrate FDEs. That's the way we make our product stronger. And quite frankly, that's the way we produce these numbers, because the closer you are to the front line of the very complex problem that a black box was not meant to solve, cannot solve, and at this point everyone knows a joke to believe it could solve, that's where you, and by the way, it's the safest position for us, because this company, we will always believe that we are outsiders. We need to be in the place where the most valuable problem is being solved, because that's the way we end up staying, solving the problem tomorrow, and the way we get paid.
Thank you both. Our next question is from Dan with Wedbush. Dan, please turn on your camera, and then you'll receive a prompt to unmute your line.
One.
And then with the actually.
Mr. Dan Ives, we don't see you.
Hello.
Oh, there you are.
Yeah, great. Look, obviously another monster quarter for you guys. Congrats. So my question for you is, for Alex and the team, can you just walk through just the accelerated sales cycles that you're seeing from so many companies that have gone to the boot camps? Like, what surprised you from when they come to you at that first sort of, contact to now actually launching deals? I mean, maybe you could talk about that just in terms of everything you're seeing anecdotally.
Great. Thanks, Dan. So I think, we look at U.S. commercial. We closed $1.3 billion in TCV. That's 6x on a dollar-weighted duration basis from what it was a year ago. And of those deals, 83 were worth $1 million or more, 40 were $5 million or more, 21 deals were $10 million or more. I've been involved in a lot of those directly. I'm feeling exactly what you're asking on the ground from customers. And what's happening now is from the C-suite across the company, customers are coming to us looking to not just say, let's do a use case. The customers where we're having the most impact are coming to us saying, how do we deploy this across our entire organization? How do we reorganize our entire organization around Palantir and AIP? And that's what's happening on the ground. And we're singularly focused on delivering the value to the customers, and that's our go-to-market. How do we get the product to them and deliver the value?
Where Ryan is really very much on the front line here is, there's both how many customers approach you. I think where we're seeing the biggest shift is the customers who've approached us very quickly want to move to, how would I change my enterprise to express it in a way that's most valuable according to my terms in your product? And then literally want to reorg. A shorthand version that we often use is, you used to have to take your company private to change the unit economics of it. Basically, just like we're providing venture results, high-end venture results to normal investors in the last couple of years, what we're doing actually in enterprises is providing a private equity-like transformation in the public markets, in the public space, under the current leadership. And that's essentially what our best, and by the way, the other thing Ryan would tell you about is our newer clients have much higher expectations of us. They're essentially, I want to transform my business. I want to do it in months. I want to do it in the public eye while being in the public market, mostly, not exclusively. And I want you to not only do the product side, but also tell us, how would you actually implement AI, Foundry, Ontology, FDE model, and our tribal knowledge to do that? And it's a completely different game. We used to have to beg and plead to be when we first started talking, we were begging and pleading to be at the margin of a problem that could affect a subset of the business. By the way, Shyam, it's unfortunately, he can only tell you 1% of what he's involved in, but this is exactly the same in the U.S. government around the world. It's the things that we're sitting on and working on are crazy, crazy important, and they're not downstream of the problem. They are the problem, and we're reshaping them.
Thank you both. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera, and then you'll receive a prompt to unmute your line.
Good afternoon, everyone.
Hello.
So I'm going to do, as usual, a couple of questions, one on commercial, one on defense or government. On commercial, I'd like to follow up to Dan's question. And let's see if you can discuss what changed from a behavioral perspective, from a customer's perspective, to see this accelerated appetite to incorporate Palantir, to not only accelerating how many customers you have, but also the existing customers go up the value chain. And what changed internally as well? We recently saw in a visit these like AI agents or AI FTEs. Like, how are you incorporating tech internally to be able to accelerate and catch up with that demand? And on the government side, U.S. government up 50% plus is really impressive. And how do you think about opportunities like Golden Dome going forward, piling up to this?
Well, you guys want to answer these questions? I think that there's the external one, which is like, what does it feel like? That's clearly you. The internal one is a really subtle question, and I don't know, anyone should jump in there. And then obviously we have Sham opine on, yeah.
Yeah. Well, do you want to start with commercial or?
Sure. Yeah. I think on the external, I think it's like going deeper and deeper and more like tangible results with customers where there's a network effect incoming, like customer sharing impact that we're having and direct impact we're having with customers. Customers are seeing as it's a continuation of what we've been doing, but going deeper and deeper with the customers on that impact. And I think that, what we're seeing is more and more are now coming to us saying, and the ones that are most impactful are coming to us saying, let's do more.
Ryan is our best at being a wonderful, I'll just give a vulgar version here. Our clients realize the choices suck, basically, and they've tried a lot of stuff. It hasn't worked. And then we're in so many verticals. Let's just say we're in vertical 252 and we dominate for one customer. People see that. And then they're like, oh, well, I'll try this with some, I don't know, knockoff, half fake thing. It's just like, and then a lot of people really still don't understand that are still trying to do this long migration where, LLMs are going to perform as if they're LLMs and ontology and as if the LLMs were not a commodity. But then in the marketplace, they see the final result of someone else using ontology, Foundry, FDE. And now it's like, wait a minute, I'm paying hundreds of millions of dollars and getting nothing. And the person down the road I kind of look down on is way ahead of me, and their unit economics are transforming overnight. And that just shifts the whole conversation. Because then we're like, okay, well, if you want it to work, you're going to have to do these 5 things. And these things are like, you're going to have to talk to Ryan, and you're going to have to, occasionally meet with me, and you're going to have to actually allow us to come in with engineers, and we're going to have to actually work on the problems that are valuable for your business, and also look at the costs that are dragging you down. By the way, the cost for most businesses is not just the actual money they're wasting. That wasted money creates an ecosystem of waste. They're talking to all these vendors all the time about all these things that will never work instead of solving the problem. It's like, and so getting the pathogens out of their business is a real issue. And now they're really, really interested in this. And then on the internal front, I would say, it's just, we have to double down. The most important thing for us internally is, with all this success, we do not want to give up the unique attributes of Palantir and somehow purchase fake ways for us that are artificial for us. And so making sure we are very, very close to the problem and making sure everyone here, like if you heard our internal dialogue, it's much more like, who's on the factory floor here? What are we doing internally? How do we make sure our products are better and better? How do we make sure, say, Sham, who's a savant at going around and figuring out what the underlying tech issue is. How do we making sure we have the best product team and the very, very exact right fit for every single deployment across our deployments that we care about, especially mission deployments, which we highly, highly overvalue in terms of our time and energy. And like, how do you make sure Palantir stays as tribal and cultish and unique as it was 20 years ago? How do we double and triple down on that? And how do we recruit the right people? And then internally we have, we power ICE, we power efforts to defend America and Ukraine, and with allies. We're on the front line of all adversaries, including vis-a-vis China. And we support, we're at ICE, and we've supported Israel. Okay, these are very controversial. I don't know why this is all controversial, but many people find that controversial. Okay, so how do you align people to focus on these things in a way that is actually beneficial for us and our clients. These are really hard and tricky issues that we spend a lot of time. I would say as an overarching thing, because what we found is the more we focus on our internal dynamics, the better our numbers are. That's why we have less salespeople and we have 77% growth in 75% of our market, 121% growth in US Comm. Please tell that to some of your friends. I don't even understand how they can look at these numbers and not drop the key out of their Motel 6 and just like say, you know, I mean, they're bombastic numbers, but it's like internal focus.
I'll make the mistake of trying to follow Alex there and just say on the internal side with AIFDE, that's why we actually originally built it. You know, our headcount has grown roughly 10%, but revenue grew 63%. How are we doing that? You know, we've made our FDEs wildly more productive. And I mean, so much so that we decided to give it to our customers, and we've started to make our customers more productive. When you have a note like the Army Vantage note, where the Army's consolidating into the Army data platform, you now have an army, literal army of green suiters who need to become proficient developers in the software. And you have a generation of green suiters whose first interaction with the software is going to be with AIFDE. They're going to be superheroes on day one. I think it's accelerating adoption, it's accelerating understanding, like the depth of adoption, not just are you using it, but how much of it are you really using, how much of it can you understand? And then quickly on your comment on the US government business, like, yeah, the number of opportunities out there are great. I can't comment on all the opportunities you mentioned there, but whether it's NGC2, the continued growth of Maven, I mean, we have, of course, America's involved with 3 conflicts right now in the world, from Europe, the Middle East, and in our own hemisphere right now. And things are getting a little spicy in Africa.
By the way, let me say something slightly political, and I'm not saying other people agree with this, but when people are attacking our soldiers for stopping fentanyl from coming to this country, I want people to remember, if fentanyl was killing 60,000 Yale grads instead of 60,000 working class people, we'd be dropping a nuclear bomb on whoever was sending it from South America. So it's slightly like we in this at Palantir, we are on the side of the average American who sometimes gets screwed because all the empathy goes to elite people and none of it goes to the people who are actually dying on our streets. And that's why, it's like when you have an open border, it means that the average poor American earns less. I know my fellow progressives believe having an open border is going to make things, but that's because they're actually repping elite people instead of the working class. And the same thing in South America. It's like, to believe our Constitution does not give us the right to stop 60,000 deaths a year of working class men and women is insane. And this country is right to stop that. And I am very proud. I don't know all the efforts we're involved in, but to the extent we're involved in these efforts, I and most Palantirians are very proud of this.
You're here.
Thank you. Alex, as always, we have a lot of individual investors on the line. Is there anything you'd like to say before we end the call?
We're rocking along. Please turn on the conventional television and see how unhappy those that didn't invest in us are. Enjoy, get some popcorn. They're crying. We are every day making this company better, and we're doing it for this nation, for allied countries, and also for what, and I don't really like the term retail investors. How about sane people who put up their own money and fight for us? And by the way, you are fighting for the right side of what should work in this country. Meritocracy, lethal technology vis-a-vis adversaries, products that spread GDP to working class men and women by making their value creation higher. And by the way, your bank account. And thank you for that.
Thank you. That concludes Q&A for today's call.
All right. That is the conclusion to Palantir Q3 2025. You had a lot of energy coming in from the entire team, especially with Dr. Karp. And he obviously had a message to get across, and I think he got it across. Let's start with you, Amir. Your thoughts on the call.
So someone wrote in the chat, like during, I think everyone noticed this as well, but someone wrote, I counted exactly 114 table banks throughout, his opening speech. He was sitting and banging the heck out of that table. No, well, we kind of predicted that nice question, another bootcamp conversion one, wasn't really answered. Not too important. I think the two biggest ones was, of course, to see, okay, what is happening with AI FDs. I mean, it's been a topic for a while. There have been some demos out into the public, some kind of, there have been some whisperings, but they actually started to give us some kind of numbers like associated with it, which is what I love. I always say this, that people don't always understand, where Palantir is implemented. They don't always understand the use cases at a specific company, but everyone understands time. When they say that, spawning an army to, of AI FDs to transform a legacy data warehouse in 5 days that would have taken 2 years, like everyone can understand that. 2 years to 5 days, that is pretty significant. And then also, the AI high mind, the new capability there, great. Overall, the quarter, really, the business accelerated on throughout every single segment, everything accelerated, even the weak ones, as you mentioned, like Europe was carried by Southeast Asia, and Korea and those markets. I also want to highlight the last question there. It just made me picture Brent Thiel, just the interview we watched with the Jefferies analyst just before, when he said, yeah, turn on conventional TV and watch those who didn't invest into us cry. And then if you guys remember Brent Thiel's face, he kind of looked like he was about to cry, he looked pretty pissed off, just sitting there on CNBC. It was magical. But I let someone else give their initial thoughts before we dive into deeper.
Arnie, go ahead. Your thoughts?
The thing that intrigued me the most is seeing the evolution of FDs, the AI FDs that now empower, from what we understand, the FD themselves and then the clients. That is what really talks the language of shrinking time, to the point where I was really wondering the other day, imagine you are Palantir, you are called by a client, how you can really show what you can do, what you can tackle in very fast. And essentially, they described that with this new product, AI Hive Mind, which is an aggregator of AIFDs or similar agents to tackle problems. I would be very curious to learn more about this, but seems so powerful if it is real that you can bring 2 years of work of a highly skilled FD into days. It means that you can have almost 100x the interactions with your customers. So that to me seems the strongest hint of the entire call, because it's one of those stuff that really affect the numbers of the company. We were saying before, if you look at it from the eyes of normal company, when you see numbers like this, you can start rationally thinking, oh, this is probably a peak, then stuff will normalize. But if you start including these considerations of what is AIFD, and then the management says, look, the way we are accelerating while also getting a lot of margin is thanks to AIFD. And then we are seeing an evolution of AIFDs thanks to this new product. These are the stuff that make me think, okay, we are at a peak in terms of numbers. The peak is not the official peak. There is enough substance for all this trend to keep rolling. Maybe it will not be always a 60% growth or so on, but certainly it will be very, very strong. And if you can grow this strong while also having these margins, you always have ground for the valuation.
Okay. Matt, your thoughts on the call?
Well, I think it was a phenomenal call. I mean, who would have expected back in 2020, 2021 that we'd be actually thinking that we'd get to 4.5 billion or so in revenue in 2025. I mean, that's just we're literally within an arm's reach away, and yet here we are. I think everybody back then was laughing, and I think it just goes to show that really Carp is excited, and I think that there's even still more things to kind of come with respect to a lot of contracts that are being worked on. Sham obviously is out running about, doing all the conferences, going to the White House even. I think we've seen him, making all these deals with a lot of these other companies, obviously showing up and saying they're going to pledge, 50, $100 billion deals to the White House. And Sham's sitting right there. Obviously, there's a plan in the background that we're obviously not privy to, that I think is yet to truly come through. And I think a lot of that has to do with maybe what happened with NVIDIA. You're starting to see that partnership come through. Maybe the Golden Dome stuff is going to come through. I still think there's just a lot of things with respect to opportunities that Palantir has to enter. And like you stated earlier, I mean, we're only at 911 total customers out of thousands upon thousands that can really benefit. And I'm starting to see others really start to stall out. Like Databricks is really starting to stall out, and several others. Snowflake, obviously, we showed a great graphic with respect to revenue growth for them earlier. So I think people are really starting to recognize that what people said was a great technology and great software or great service that people were really hoping to really revolutionize their business isn't showing up as once expected, and is likely just throwing good money after bad. But you get good results with Palantir software, and I don't think that we've fully seen. They stated something huge in there with respect to AI FDE not necessarily being fully rolled out as of yet, and some other key products that I don't think are fully rolled out as of yet, but are probably in the trial mode. I'm very curious to see when those are officially rolled out and actually start to drive the bottom line, what we can expect in terms of continued customer count growth. And it might not necessarily mean that, revenue growth continues in the 60, 70, 80%, but you don't need much. I mean, all you need is continued revenue growth from a net dollar retention perspective, and that kind of provides a good floor for what your year-over-year revenue growth would be. So I'm very curious to see what ends up happening, and yeah, it's going to be interesting.
I also think there were some interesting comments regarding like the current customers. So they mentioned that the top 20 customers, I did the calculations, still 20 out of 911 customers account for 43% of revenues, and they are accelerating like how much they're growing. The top 20 customers account for almost half the business, and they are now growing 38% year over year, which is higher than the net dollar retention. So the most sticky, revenue, highest value clients are growing higher than the overall net dollar retention. And then the question came up in the call, like, well, how are you able to scale like this? And there was I don't remember the exact quote, but it was something along the lines of, we own part of the AI market that cares about value creation.
Yeah.
Because there is so much hyper focus on who can build out the most CapEx, who can, buy the most GPUs, who can, build the next LLM. But he put it like, no, we own the whole part of the AI market that cares about value creation. And that is like really powerful, because he also mentioned we create the value and then we get paid a portion of that, which is like how I always envisioned in my head, like, well, how can Palantir grow to like $1 trillion, $2 trillion market cap? Well, when you are able to sell your product for basically any price, as long as you're providing value like that is in aggregate of that. So let's say that you create $100 billion of value for a business, it is not like too weird to charge over $1 billion from that customer annually, like just some bogus numbers to put an example. If you can create more value, you can charge them more. Like it's not a fixed price. So I think that dynamic is really, really powerful for Palantir. And he also mentioned that, like, yeah, we're kind of known now when people contact us and get in touch with us, they have higher expectations than customers have had initially. They're like, okay, make my business amazing. That's like what they say. And then it's up to Palantir to come in and be like, okay, this is how you're going to fix your business. Like, imagine that. He also like talked about some dynamics about, without having to go take your company private or whatever. But essentially, you have your company, you're kind of starting to fail, or your competitors doing better than you. You're like, hey, Palantir, come fix this for us. Like, imagine a scenario like that. It's just completely crazy to me.
Consider how different it was 3 years ago when we saw Karp banging on the table, but not because he was happy, but because it was, we know you need this stuff to survive. We know that in the future, you will need this stuff, ontology and Foundry, even more. And this was before AI. And now we are at the point where customers reach them. We are not interested in a use case. We want to rebuild the entire company based on AI. And stuff that I particularly appreciate is how credible Palantir is, that you can craft the financial metrics you want based on results. Look at Palantir numbers. They are perfect. So what they do actually works. And you have the top clients in each industry now that leads the way. And Karp says, okay, the customers now reach us because they look, potential customers are they reach us because they look what other companies using us do, and they realize, okay, the alternatives suck.
Yeah, I agree. I pretty much agree with everything you guys said. I thought Karp was very excited on the call, and I think the reason he was excited has nothing to do with the stock, quite frankly. It had to do with the fact that this quarter was incredible. And the stock will do whatever the stock does. I mean, again, it's at 202. A lot of us were covering this name. Below was $10. So it's hard to have a lot of sympathy for it's not at 220. It's like, okay, that's fine. If that's the extent of your analysis, then you can have that. But if you're actually holding this company for the next 10 years and you're looking at not the returns of the stock, which have been far beyond most stocks in the entire market, but actually looking at the results they put out, I mean, I would be as energetic as Karp as well if you're pulling up 114% rule of 40s, 77% U.S. commercial growth, no debt, $6.5 billion in cash, and top line revenue growth of 63%. I mean, these numbers are just incredible. It's hard to critique the numbers. It's just, the stock has a lot baked into the valuation already, so you might not get an explosive move based on just these numbers, but the numbers are incredible. And so I think the biggest thing that Karp said in that call was that there is a philosophical macro trend around the warfighter and America. The last point he made, I can't agree with even more, which is this idea of, if 60,000 Yale graduates were dying because of fentanyl, the United States would do something about it. So when you have the elite of the United States, we talk about this bifurcated economy, the elite of the United States, when they start suffering, that's when the United States starts to pay attention. But when you have average men and women that are working 9 to 5, living paycheck to paycheck, when they're suffering, no one cares. And I think if you are betting on Palantir, you're betting on a company that's building software, not to replace those people, but to actually empower those people. And I think that's a really important point that Karp wanted to get through, telling people this is who you're investing in, this is why you're investing in the company, and this is what the analysts, have never fully understood as they've been trying to analyze this company. So there you go. That's what we got on earnings. Again, the stock will do whatever the stock does. At the end of the day, this was an exceptional quarter. Lots of energy from Karp, Sham, and the team on that call. And they put up the numbers that, quite frankly, justify having that type of energy. We'll be back tomorrow. I'll be back later tonight at 9:30. I'm doing another podcast, so I'll be live, and we'll do some more discussions on what's going on in the world of tech. I think we might have a Palantir Weekly this Friday to recap the numbers. If we don't, then we'll eventually schedule a session where we all go deeper into the numbers. I'm sure we'll put them in our Excel sheets. But that's what we got. Any last words, Arnie?
Just wow.
Amir?
Yeah, amazing. I just wanted to highlight one last quote that went under the radar a bit, and that is that they mentioned that the military has taken a decision to consolidate everything onto Vantage, which basically means that the army is like starting to align themselves and start to do everything on Palantir and will replace and kill all the legacy systems. So we have some enthusiasm about, Palantir government side, GoCorp and that gang. So that's fantastic news as well.
Was my impression, or from the comments Sham did in saying there are a lot of stuff I can't talk about. We can assume, okay, Sham is working into some very big projects. That's the impression I got.
I agree.
Yeah, I think Golden Dome is going to be a big piece that is very undervalued that I don't think people are really paying attention to, and I think that will be billions of revenue alone for Palantir. And I don't think there's anybody else out there suited that could handle something like that other than Palantir. So I'm sure, obviously, we're talking hundreds of billions of dollars that has to be spent before the end of Trump's term if that goes through. And a large portion of that would go to Palantir. It's not just one company that's going to get that, right? I mean, we're talking a multitude of companies that are going to have to partner with each other to be able to make that successful. And the last piece I'll say is, hey, the stock might drop, in the short term, and it is richly valued. Even with these new numbers, you're still talking about a PE between 200 and 300x if you kind of annualize out these numbers out for the next 4 quarters, not including any real growth. But what I will say is just based off what we're seeing and the continued increase in margins in 10 years' time, we were talking about a company that will continue to be dominant and will likely be the most important enterprise company that we have. And obviously, it plays a huge part in my values, which is supporting the West and helping civil liberties. So I think to me, it's a no-brainer. I'm going to continue to add every time I get a paycheck.
All right. I love it. Thank you, everybody. I'll be on a little later tonight. Amir, Arnie's, and Matt's Twitter and YouTube's in the description. Appreciate everybody here, and we'll be back again next time for Palantir Earnings.
Thanks for having me all.
Bye, everybody. Have a good one.